Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, December 12th, and we are live. We are at the end of the week, the official second week to end out December. We got a lot to talk about. We got some Nvidia headlines this morning. We got some Broadcom headlines. We got Goolsby from the Fed who's speaking. Bunch of things that have happened over the past couple of hours as well, which is why you probably saw the S&P 500 get a little bit of a spike in the pre-markets based on some of this Nvidia news. And then obviously Broadcom earnings yesterday were pretty important, so we'll talk about that and go deeper into what has happened over the past 24 hours. Trump made a bunch of announcements yesterday around AI-related executive orders, so we'll talk about that. Essentially a new framework for how to think of AI. And we've got a bunch of other different macro updates in regards to inflation, the labor market, different elements of the jobs data that we're going to be looking at. And so we're going to get through all of that today as we end out the second week of December with the S&P 500 basically at all-time highs. We did hit all-time highs on the S&P yesterday after hours. I think we got to 690.50. 689.70 was the previous all-time high. So it might not feel like it because some of our favorite stocks aren't at all-time highs individually, but the fact that the S&P 500 is at all-time highs is quite incredible. And, you know, it is relatively healthy if you don't have Nvidia that's leading the S&P 500 because you are seeing a little bit more of a broadening in the rotation trade, which is very important as well. So we'll be talking about that. You may have noticed that your boy found his scarf. If I had found this scarf on Saturday last week, I wouldn't have missed the show on Monday because I wouldn't have got sick. So I found it yesterday when I went back home. And I said, I'm wearing my freaking scarf. And your boy's cozy. Your boy is cozy. I have not been this warm in a long time. No, the heat is on. But even with the heat on in the apartment, it is nice to just feel cozy. So, I don't know. At some point, I'll probably take it out because it becomes too much. But it feels great. It feels great. Like I genuinely, I forgot what it feels like to wear a scarf and protect your neck in the winter, in the cold. S&P 500 right there, basically at all-time high, 688.90 in the pre-market, down about 0.04%. But I'm very happy to be having my scarf again. So rent is high, you got to save on heat. Yeah, exactly as well. It looks like a neck injury. It looked like I'm from the Taliban. Okay, that's probably accurate, but still, I'm just trying to be warm, okay? I'm just trying to be warm. My mom did not knit this for me, but shout out to Scarlett. She was at the New York City meetup last year, which, by the way, we're doing a stream tonight, 7:30 p.m. The person who is now going to be in charge of a lot of AK Media operations, my new manager, she'll be live with me on the stream. It'll be fun, and we'll have a lot of details on the meetup for New York in February, and just a bunch of different updates for the channel. So that'll be live at 7:30 tonight. And for those that have been waiting for updates and a lot more details and just like more logistics on how that's happening, that'll be talked about tonight. But Scarlett, who was at the first New York City meetup, who bought a lot of Palantir at $7, she knitted this for me. And it's like a Palantir. Does it have a logo on it? She had a hat that matches with it that has the Palantir logo. I don't know if the scarf has the logo on it, but she knitted this, which is awesome. So there you go. Yes, a scarf is like a blankie for your neck. Exactly. If I had this on last week, I wouldn't have missed the show on Monday. So I'm keeping it on, and your boy's gonna be nice and warm. All right, so we got a lot to talk about. Let's get into it. I think we start off with the headline this morning from Nvidia, and we'll get deeper into what we've got going on, and then we'll get into Broadcom, obviously, because we had a lot to talk about from there. But this broke about an hour ago. This was the headline. Nvidia jumped to 183. We'll see if Nvidia continues to hold on to these levels. But Nvidia is evaluating increasing production of the H200 AI chips due to strong Chinese demand. Chinese demand for H200 chips ahead of Nvidia's current production capacity, sources are telling Reuters. Now, Beijing still has to approve imports and is weighing conditions such as bundling H200 buys with domestic chips, aka not only allowing Alibaba, Tencent, and some of these Chinese tech companies to only buy NVIDIA chips, but the H200 is about 6 times more powerful than the H20, which is the last chip that China's really had access to from NVIDIA, and roughly 2 to 3 times China's best local accelerators, meaning that although they don't have Blackwell, which is significantly better than the H200 is significantly better than whatever China has. And so all of that stuff we heard on Monday, which caused Nvidia to go down from 190 to yesterday, like 176, around the Chinese don't want Nvidia chips. It's like they may not want it, but they need it, especially if they want to actually be consistent in keeping up in any level of the AI race. If they're not getting Blackwell, like at some point they're going to have to concede, all right, we're not going to get the best chips, but we need chips that are at least somewhat reasonable to train on in the modern era. And you can't be using chips from 5 years ago. So from that perspective, again, bullish Nvidia. I think the fact that the stock is still not trading closer to 200 is just presenting people more and more of an opportunity. 180, 176, and whatever the fears the street has, Nvidia is going to have to keep putting up earnings to show that those fears are not rational. But all the signs are pointing to those fears, again, not being rational. Jensen Huang as well was named the Time Person of the Year from, from the Financial Times. So he was part of the Time kind of like architects of AI, but he was also named the Financial Time Person of the Year. And so we got a lot of these business magazines coming out giving away their Person of the Year awards, and Jensen Huang did it for the Financial Times. He also told Time Magazine yesterday, a little bit of a quote that's been going viral. There's a belief that the world's GDP is somehow limited at 100 trillion. AI is going to cause that 100 trillion to become 500 trillion. So, I mean, it would be quite incredible if that's the type of labor gains, productivity gains, margin enhancement that we see. But it's hard to bet against someone who is spearheading that entire movement at scale the way that Mr. Jensen Huang is doing. So that's what we got with NVIDIA. And that's why we're getting some excitement as well in the pre-markets for NVIDIA stock. Now, Broadcom, this was the big one for yesterday. I was live with Sam and Chris and Steve as we were discussing these earnings. Look, the earnings were good. Broadcom's down about 5% in the pre-market. I think there's obviously a couple of reasons why it's down. It did pump 3%, and then once Hock Tan started answering questions on the call, the stock ended up tanking, which is what we see happen so many times in the markets. And I think before we even get into what he said, stock was trading up 80% for the year. So, I mean, they kind of needed to have a perfect quarter. They had a good quarter. One could argue it might have been a perfect quarter. AI revenues doubled 100% year over year, and the guidance also is better than what the street expected. So they beat EPS by like, 17%. Like everything that they needed to do, they did in a pretty effective way. The problem is they got asked some specific questions about none other than OpenAI. And those questions ended up leading to them saying some things that, well, were not the most productive things to say if you're trying to convince the street that you're going to get paid by OpenAI. And as a result, the street got a little upset. So this is what I really think brought down Broadcom. As far as the quote from Hock Tan, as far as the OpenAI view that you have, we appreciate the fact that it is a multi-year journey that will run through 29, as our press release with OpenAI showed, aka 2029, 10 gigawatts, more like 2027, 28, 2029, 10 gigawatts. We do not expect much in 2026. So that headline immediately got the stock down, and then they guided for their non-AI revenue, which is about 4.1 billion. So similar to what it was last year, as flat year over year. So because you have a year over year non-AI part of the business, which is still a decent chunk of their business, $12 billion run rate going flat and showing no growth, street got upset about that. So you had remarkable growth in AI, remarkable growth in ASICs, remarkable growth in all the different elements of how they're investing in CapEx, data centers, et cetera. Like everything you wanted to hear from Broadcom was amazing. This is a $2 trillion company, a little bit below 2 trillion at this point. But the OpenAI deal was a big deal. That's what got them a lot of excitement back in October. And now they're saying, yeah, in 2026, and AMD hasn't really announced any OpenAI revenue in a meaningful way. Nvidia basically said, we don't even have a definitive agreement with them. We just have like a framework for an agreement. And now Broadcom is saying, hey, this is going to take some time for it to meaningfully accelerate. And as a result, you're not seeing that type of momentum on a stock that's up 80% year over year because, they just didn't have the best commentary on the earnings call. Now, Goldman Sachs right here said today, management did not update its prior guidance of 40 to 60% AI revenue growth in fiscal year 26, despite indicating that AI revenue is accelerating. During the conference call, the CEO mentioned that the company has a backlog of 73 billion in AI product orders that will be shipped over the next 6 quarters, which disappointed expectations, even though it was presented as a minimum and management did not provide an AI revenue forecast for 2026. So although 100% growth in Q1 was guided for fiscal year 2025 for AI revenues, which is incredible, they did not update formal fiscal year 2026 guidance, which is still at 40 to 60%. Still incredible, still phenomenal. 40 to 60% growth is amazing. It's just when you're trading at 80%, when you're trading up for the year 80%, and you are, relatively more expensive than Nvidia when you compare their multiples. Yeah, you can't not increase guidance, which is the funny thing about Nvidia. It's like Nvidia's already relatively cheap, 25 times 2027 earnings, and they increasing guidance dramatically, and they're not afraid to give guidance. And quite frankly, if they didn't give guidance, Jensen giving that $500 billion number, Nvidia will probably be trading lower because of how much of the sentiment is negative. So they know they have to be as transparent as possible and update guidance aggressively, and they're not getting rewarded for it. Broadcom, which doesn't do that to some extent, is getting a much higher premium than Nvidia, although it is down 5% right here because of the lack of increase on the guidance. So look, if you're a Broadcom shareholder, I don't think you should be upset about this call. I don't think you should care too deeply about how some of the idiosyncratic questions were answered by management. Like, these questions have real implications, but at the end of the day, if you're long Broadcom, you believe that they're going to grow. You believe that the custom ASIC market is going to be massive. You believe Google's TPUs are going to be crazy. Broadcom also said they got another $11 billion order for the Ironwood GPUs. Again, Broadcom is a big partner with Google to make those GPUs. They didn't say who the customer is, but it's very likely that it's Anthropic. So everything's going in the right direction. It's just the stock was up 80% for the year. It's just one of those names that, like, it was going to be hard to make a big move unless it was perfect. And there were some parts of the call that were not perfect. So 384 right here. Now, does this pull an Oracle? Oracle's call was horrendous. Okay. Broadcom's call was not horrendous. There were just a couple questions that weren't answered in, the best way. So does this thing fall 10% today? It's down 5% right here. I mean, maybe. I think that dip gets bought pretty easily, even if it doesn't get bought today. So, I probably wouldn't bite at the dip today. You'd probably give some time to let it settle out. 3-day rule, same thing with Oracle. But if it falls, 10% during the day, I don't think that's like some bearish thesis for the overall AI trade, for the overall argument around the ASIC market. It's just the stock's taking a breather. And I think that's a reasonable thing for it to do, given it was up that much. So that's what we got on Broadcom, and we're going to see how that affects the broader market. When Broadcom was pumping yesterday after hours, you had the S&P 500 that made a massive move, 689.17. It closed 689.31 or in the pre-market right now. It did touch 691.24. So the fact that the S&P is up in the pre-markets, by the way, and Broadcom's down 5% and Oracle's down another 1% after those two, were the sort of major names that were defining the week based on AI, is quite incredible. And it means we are legitimately seeing a rotation. And that rotation is good because there's other parts of the S&P that are not lagging, which is very, very important. What is the 3-day rule? The 3-day rule is sort of this like conventional argument that after a stock takes a dip immediately after earnings, you give it 3 days to see how the street reacts to it. And after 3 days, if the stock is still, meaningfully down, then maybe you want to nibble at the dip. Which means you in the 3 days of the initial drop, if it reverses, then you miss the dip, but like at least you don't take the risk of it dipping even further. And if the stock is kind of flat, then that maybe it's consolidating. Maybe 5% is the worst amount of pain that Broadcom is going to see. Same thing with Oracle, down from 220 to 198, fell all the way to 187. Now kind of back into that low 200 range, just below 200. So maybe if it normalizes there, then after 3 days, it's more easy to buy the dip, given the street is okay having these prices. And so that's what we're gonna have to see for Broadcom. Lulu crushed it. Good earnings. CEO's leaving. Street likes it. Up 10.75%. They beat EPS by 17%. Again, I don't know how these retailer companies, if the consumer is in such horrible position, are being able to beat by these levels, but they are. And so Lulu on trend with a lot of the other companies like Abercrombie and Urban Outfitters last week that showed good results. I was talking about this with Steve last night. I don't know what's the reason to be super excited about Lulu going into 2026, unless there is something about their go-to-market or their brand positioning that is fundamentally differentiated. But outside of that, there's just a lot of opportunities in AI. Again, Nvidia trading at these levels feels weird versus going long overpriced jeans and sweatpants. So it is what it is. I think it was a good quarter, and I think 2026 should be fine. But it was not like something they said on the call that was just so tremendous that you have to really take a second look at Lulu. Now, granted, I haven't dug that deep into it, but it was a good beat and raise. CEO left, street's excited about that, but didn't get too much besides that. And then Costco, relatively good quarter as well. That's down 0.37%. They beat on the top and the bottom, so nothing too crazy for Costco, as that one is flat in the pre-market. And that's what we got. Dude, these comments about the about the scarf are amazing. I should wear more crazy stuff just to see these comments. These are great. Amidst fresh shopping, Christmas caroling stint. Oh my gosh. This is great. Dude, I'm warm. I can't take him serious with the scarf. I am warm. I love it. I am freaking warm, and I need to stay warm. Triple V, thank you for being here. Thank you for the $200 super chat. I was on the phone with Mr. Triple V yesterday, and yeah, he has definitely been crushing it this year. And we were just kind of talking about overall portfolio management and strategies going into 2026. And so, yeah, it's been a pretty strong year for a lot of people. And you know, a lot of these names that have been doing well for people, they're starting to come back towards the end of the year. In November, we had a pretty ugly drawdown for everybody. And, you know, we talked about year-to-dates yesterday. For those that missed it, my year-to-date is 70%. And I think by the end of the year, that can get closer to 90%. But a lot of these names that took a hit still haven't recovered. Some of them have recovered decently. So Hood went, you know, from 150 to 100. Now it's back at 125. Not a full recovery, but a decent recovery. And I think towards the end of the year, it can stay at these levels. NVIDIA, I think, should be closer to 200. So we got 3 weeks left to see how these portfolios turn out. You might have some more fund managers, and if you believe in this Tom Lee thesis, that are going to start chasing in the past couple of weeks as they try to get their outperformance. But I think at this point, whatever stocks are in your portfolio have defined your year. I mean, like, simple example, Rocket Lab, my goodness, 10% yesterday. Like, if you're heavy in Rocket Lab and that thing fell from 75 to 38, that must have sucked. And I know a couple people that are very heavy in Rocket Lab, and it was annoying, right? Because you might have been up like 110% year to date. You ended up going back to 40% because one of your biggest names took a massive drawdown. This thing's starting to recover, and it has nothing to do with the company. It has everything to do with, you know, SpaceX's IPO and the idea of data centers in space. Like, these narratives, if you're in a high quality company, can meaningfully affect that company if it is positioned in the right way. And so a lot of people that lost a lot of gains on Rocket Lab on paper, those are coming back. And I think even if it closes around this $60 range, people will be happy. So Rocket Lab down about 1.5% in the pre-market, but it's up 40% for the week, which is just incredible. And so, you know, that's why I think you're getting some momentum. Why does it have nothing to do with the company? Because Rocket Lab didn't announce anything this week. The 40% move this week was not random, and people woke up and they're like, oh, Rocket Lab's an amazing company. It's like, no, there was a massive piece of news around SpaceX going public at a $1.5 trillion valuation potentially. And then you got Elon, who for 4 days didn't say anything until last night and said, actually, yeah, we probably are thinking of it. And then you had the street like, okay, so do I buy SpaceX at 1.5 trillion or do I get exposure to something else? And the number one name that popped up, ASTS, by the way, also doing well, was Rocket Lab. I don't think Rocket Lab makes a 40% move in a week, along with the other space names, unless you have excitement from SpaceX. Now, the point is, Rocket Lab is a space company that is viewed as high quality, which is why it is getting the premium, and it happens to be in the right niche. But they just didn't say anything in particular that, you know, would cause that. Sorry, it's a 55% move in the past week. ASTS as well, up 50%. So, yeah, the catalysts were just in the right place. But this is what it means to be in a high quality company that's also high beta. Like, you don't get those massive year-to-date returns unless you're in something high beta like a Rocket Lab. But you have to live with the drawdowns of 70 to 30. And it sucks living with those drawdowns. But if the company isn't a meme stock and it's very high quality and it's, you know, growing and they're positioning themselves, even if they trade at an aggressive multiple, any piece of news inside of that niche can fundamentally alter the trajectory of how people think of it. And at the end of the day, SpaceX 1.5 trillion, Rocket Lab 30 billion. We got a lot of people that are going to say, screw the valuation. Like, if Rocket Lab can even get to 1/10, which would be around, what, 150 billion of SpaceX's potential IPO, that's a 5x from here. That's 150 billion market cap. It's trading at 30. And so I think that's why you're seeing some of that momentum for Rocket Lab. All right, so we talked about Broadcom. We talked about Nvidia, Tilray. So the weed stocks are going crazy right here. Tilray's up 39%. Aurora Cannabis is mooning in the pre-market. ACB is that ticker. That's up 21%. So Trump basically said yesterday, or at least the White House, the rumors around the White House is that they are going to declassify marijuana in a more significant way. And the White House did not confirm it, but you got a lot of people close to the administration thinking that's going to happen. Trump seeks to cut restrictions on marijuana through planned order. The president is scheduled to direct agencies to reclassify marijuana as a Schedule III drug, similar to some common prescription painkillers. Also, yes, Golden Dome for Rocket Lab is going to be a big deal. I mean, if weed ends up becoming like a prescription painkiller where it is, you don't need just like a recreational license in places where it's banned, but like you can have a doctor prescribe it for a variety of reasons. I mean, yeah, the weed stocks are going to rip on that narrative. Yeah, the MSOS, that's the weed ETF, that's up 35%. Now, look, would you take this trade expecting a bigger move? I think the move has already happened, but then again, this is a pretty aggressive rumor. I mean, this is an industry that has been dead basically for the past 5 years, and Trump is sparking it to life with these potential rumors of weed becoming much more accessible. So I think the move has happened. Obviously, the move can keep going, but I think the risk reward is a little bit more tilted to the risk versus reward, because what if the White House comes out and says, yeah, this is not true? Or you just have a bunch of people that take profits, because I mean, they're up 35%, 40% on a bunch of these individual names, and it kind of doesn't have the ability to keep making a move. So yeah, weed stocks are continuing to move higher. Maybe that actually makes a move towards the end of the year. Maybe that's a 2026 play if Trump actually like officially makes this a real thing, and it opens up a lot of opportunities. But we're going to see throughout the end of the month if that continues to play out. Gold and silver, how are they doing? Silver continues to make its move, 64.47. Gold actually up 2% pre-markets, 43.44. I think all-time highs on gold are 4,500. So once again, gold and silver, from a commodities perspective, has been doing incredibly well. And it looks like this trade is going to end out nicely going into the end of the year. How many states is weed legal? How many states is weed legal in? It's like 20, right? 24 states. New Jersey is one of them. New York is one of them. California, obviously, is one of them. Massachusetts, which I haven't had to say that name or that state for so long. And now that I'm saying it, I remind myself that I can't say that freaking word. That also was one of the first states outside of California that legalized it, I think 4 or 5 years ago. So yeah, I mean, if that expands anywhere meaningfully to, 50 states, that could be a very, very big deal. Massachusetts, dude. It's the freaking craziest name for a state, and I can't say it. It's been 3 years. For those that have been watching for 3 years, I can't say that freaking word, Massachusetts. I don't get it. I don't know why it sounds like that, but I can't say it. S&P 689.17 in the pre-markets. Okay, what did Trump sign yesterday? Basically, he signed an executive order that would set a federal standard for AI, ensuring a national policy framework for artificial intelligence. This order declares that the United States must have one minimally burdensome national standard for AI, not 50 disordant state ones. The administration will work with Congress to define that standard. The objective is to prevent a confusing regulatory framework while protecting important values like child safety. This order is not that framework itself or an amnesty or a moratorium, but rather a statement of principles and a set of tools for the administration to push back on the most onerous and excessive state AI laws. I like it. I think it makes a lot of sense. If we're going to have massive AI progress, we're going to need a federal standard, and that federal standard is going to uniquely have to make sure that states cannot stop companies from innovating simply because the Texas standard for AI is not consistent with the California standard for AI. And so although there's going to be different minutiae within the laws, like there are for a variety of states that have different ways to operate, having one federal standard definitely should push the industry forward. And again, like this broader macro AI theme, you either believe it's fake or you believe it's real. If you believe it's real, the question is, are the regulators on your side? And my goodness, are the regulators on the side of AI? I mean, and I think the Trump administration rightfully understands that the only way we're going to get meaningful GDP growth is if we push this industry, which is why they're even letting Nvidia sell these H200s back to China. And they're going to do everything they need to make sure this industry succeeds. And as a result, I think that should be relatively bullish for a lot of those names, obviously in the semiconductors names, but also the software names that are benefiting from the AI momentum. Pound right there, 186.56. That's down about 0.5%. And then you got Nvidia that's up about 0.5% in the pre-markets as well. Quick update on Grab. So I actually have an update today on Grab. I know we haven't had a lot of updates over the past couple of weeks, but we have a big update, relatively big update. COO Alex Hungate was at a conference and he spilled the beans on Q4 demand, reaffirmed commitment to service accessibility and holiday demand peak. They have 24-hour booking assistance booths at all their terminals and their airports. They're expecting year-to-date data showing a jump of more than 30% in ride-hailing demand. Tourism demand, they say, is at near all-time highs, and certain regions are demanding higher. Grab continues to put a premium on supporting its driver partners. Grab's mapping algorithms generate most of the efficient routes to collect all their locations. And demand for mobility and delivery, they're expecting could spike near 40% or higher in Q4, signaling the strongest quarter they've had in history. Quote from the CEO, "This quarter, we've had to actually boost the driver incentives slightly because the growth in demand was so high. We needed to make sure that we could maintain the fulfillment quality and reliability of our services." So look, I know the stock is not cooperating. It's a story as old as time of the stock or the company improving their metrics. This is going to be their 16th quarter of adjusted EBITDA profitability, and this is going to be the best quarter ever based on what we're seeing with tourism demand, Q4, et cetera. The COO basically outlined and said that it's going to be their best quarter, but the stock's not reacting to it. And so I think there's just other factors that are controlling the stock to stay down. I can't fully explain what those factors are, but all I can do as someone who's analyzing it is say, is something broken in the company or something broken in the thesis of the stock? And right now, something is broken with the stock, not the company. And usually those tend to be some of the best asymmetric opportunities, but time is going to tell. And so I think if anyone is worried about the actual fundamentals of the company, that's just not the case. The stock market is a different question, but hopefully we do see a little bit more momentum going into the end of the year after, again, we potentially get that GoTo acquisition, which is also going to be something that could fundamentally re-rate the entire architecture of how you think of the trajectory for demand and consolidation in the region over the coming years. But that is the update we have on Grab. Okay, macro. Let's talk about some of this macro news that we come out. Got a lot of different charts here. One thing I saw yesterday, and shout out to Cactus because he sent this. GoFundMe, for people that don't know that, which I think it's a relatively global product and most people have interacted with it. It is a platform where you can donate to causes. So if you have a story around something that you need to crowdsource money for, you can make a GoFundMe. They actually used to be a profitable company. You used to take a fee off the money you used to get, and then I think they turned into a nonprofit a couple years ago. And you can say, hey, something bad is happening, and if your campaign goes viral, right, like millions of people could be donating money, and you could raise money in that way. Well, this I thought was quite incredible yesterday. They put out their top 3 things that people ended up like making a GoFundMe for. Number 1 was charity, which is expected. Number 2 were monthly bills, and number 3 was faith. So the number 2 thing that people set up a GoFundMe for going into throughout 2025 was just, hey, monthly bills, right? Hey, I need to be able to pay rent. I need to be able to pay this. I need to be able to pay that. And those were the most viral campaigns, or the second most viral campaigns around GoFundMe. Now, one could argue, as some of you guys say in the chats, some of those could be scams. Yes, that's fair. Some of those obviously could be scams. A lot of these stories, if you actually have ever donated to GoFundMe, you can verify this stuff. You can go to the person's profile. You can see what they're saying. So like, if we're not going to be as cynical to imagine they're all scams, it goes back to this argument around the state of the consumer, which is that on a platform that is built for very specific purposes around certain events happening where you can crowdsource money, the second biggest thing that people cared about to raise money for were paying monthly bills. And so I think from that, it needs to GoFundMe for heating costs. Yes, that's why I have the scarf. But I think from that perspective, it obviously does show that this K-shaped economy is not slowing down. It continues to be something that is very real. And more people, are participating in a K-shaped economy that is benefiting from some consumers subsidizing the cost of other consumers, but other consumers being incredibly weak. It's just conflicting with the data that we're seeing from earnings, where companies like Five Below are beating on earnings. And it doesn't make a lot of sense because, that should be tailored to the lower income consumer, which shouldn't be shopping so much to the point where a company that doesn't even have good margins like a Five Below is ending up to beat on earnings. So, I mean, it's quite, it was fascinating to see that yesterday, but those are the campaigns that are going viral. And if those campaigns are going viral, then you're seeing more and more of the consumer needing that excitement. People have so much extra cash that they give their money to help them with their bills. Well, the thing about GoFundMe is like, even if you can get a campaign to go viral and get 1 million people to give $10, $5, someone giving $5 or $10 because they feel bad after they read a story is not breaking their bank. It doesn't mean they're necessarily rich or anything. But if you can get a campaign to go viral and you have, thousands of people giving that money, that's when it can actually produce just bigger returns. So I thought that was one thing that was pretty interesting yesterday, given some of the other macro stuff that we looked at as well. The other update right here in the macro is what Trump said. So we talked about the Trump gambling regulation yesterday, which he's thinking of getting rid of taxes on gambling. The other thing he said is that they're preparing to introduce large tax breaks for corporations, which would function for R&D. So the tax guidance, which would come as early as next week, which will allow companies to take full advantage of research and development tax breaks. Under Trump's new tax bill, corporations can claim retroactive R&D deductions set to be worth $67 billion, which is a big deal. I mean, you got a lot of these companies that are investing heavily in AI. If they can more effectively use the tax code to more meaningfully invest in AI, and whether R&D includes data centers or R&D includes new ideas for how they can make their chips more efficient around the entire semiconductor stack. I mean, that's just a lot more investment in the overall economy. We know that the Trump administration uniquely has been focusing on not a consumer-oriented economy, but an investment-focused economy. We, quite frankly, haven't invested for the past 40 years, right? The United States companies have largely been asset light. Now they're asset heavy with all this CapEx. So that could be big for the broader AI sector. Now, it would be not the best for tax revenue, but if it increases productivity, then maybe we make up for it on the other side. And so that's one of the tax updates that came out yesterday from Trump as well. 10-year spiking right here at 4.2%. That is correct. Seeing a little bit of a move right there. It was going down yesterday. Again, we had Jay Powell on Wednesday. He was pretty damn dovish. You had Goolsby this morning on CNBC, who was one of the people who voted to not give a rate cut. And he wasn't that hawkish, to be honest. Basically, he said, I just want to see more data that inflation's going down because I think the labor market is cooling, but it's not cooling as aggressively. And I would vote for multiple rate cuts in 2026. Nonetheless, you had 9 people that disagreed with him and felt the labor market is a bigger issue. 10-year right here is spiking a bit, 4.198. I don't think we get any crazy macro data today. We had a lot of the jobs claims yesterday. We had consumer confidence. So we shouldn't be getting too much data today that would potentially affect stuff. But you do have the 10-year making up a little bit of a move. Another chart on data centers. So take a look at this. JP Morgan is the largest lender to data center infrastructure so far in 2025, with exposure to nearly $6 billion in debt. And then the next one is a Japanese company. Then you have a French bank. And then you get down to the American banks like Blackstone, Bank of America, Deutsche Bank, Citigroup, et cetera. But you do have a lot of the banks, which financials had a massive run yesterday, that are starting to get more into the data center space. And there's obviously seeing this as a massive opportunity, which is also spiking up the credit default swaps for some of these companies that are really engaging in this debt financing. And overall, I think this is going to be a trend in 2026. That probably doesn't slow down as well. Yeah, Fed's Goolsby said he's projecting more rate cuts in the medium for 2026. So he's actually dovish for 2026. He just wasn't dovish for this particular cut that we had on Wednesday. Wow, look at this headline. Interactive brokers allowing accounts to be funded by stablecoin. Okay, so you have that headline that a brokerage is allowing your account to be funded by stablecoin. Then you had a YouTube headline. YouTube is allowing creators to get paid in stablecoin. I thought that was a pretty interesting thing. They're basically trying to give creators more independence by choosing how they get paid. And you can essentially get paid in crypto. And the interaction is with PayPal's USD stablecoin. So the thesis for Ethereum is that a lot of the stablecoin adoption will continue at scale on Ethereum. Not all of it on Ethereum, but a good chunk of it. Right now, I think it's about 62% of the total volume. And if that continues to happen, then we should see more and more of that excitement for Ethereum as well. I don't know why I said paid in, bro. That was a weird word, but that's what you got. Fermi, another data center stock, is down 45%. I think they lost one of their tenants this morning. This is a company that went IPO. Yeah, down 40%. I believe they lost one of their tenants this morning is what was announced. This was an IPO back in April, or no, back in like July. So I don't think it's a big, heavy retail name, but these data center names are volatile. You lose a tenant, you lose a client, you lose a hyperscaler that you're working on a deal with, your stock is going to get hit pretty bad. And, that's what we've seen with Nebius and CoreWeave and all those guys. If they gain a client, their stock gets some love. If they lose one or there's any bad headline, the data center names obviously will take a hit. So you're seeing Fermi right there. That is down about 40%. Dude, these comments about the scarf. These are, I should get a new scarf. I should get a different color scarf every day and wear it. First of all, I just feel so toasty. I feel so warm. I've never felt so warm doing Market Open. So I think scarves are the next big fashion thing for me going into 2026. That's what we got to do. Okay, what other main headlines do we have this morning? Again, nothing too crazy today. We don't have earnings. We don't have anything wild happening after hours. Ultimately, we're going to have to see how this plays out going into next week. We got 2 weeks left of December, so this is really where we're going to see. Do we get that outperformance? And we got the S&P 500 trading at all-time highs, which is nice to see. I guess Robinhood, let's talk about that for a second. You got a lot of people yesterday on Twitter that are making these proclamations that I think are a bit absurd, but nonetheless, they're making these arguments, and I don't know. It's not even worth responding to some of this stuff. So you got people saying Robinhood's going down 70 to 80% next year because they looked at their November metrics, and because there were 4 less trading days in November after October was a unusually volatile month. Therefore, the November numbers were down month over month, even though they were gigantically up year over year. Their argument is Robinhood is dead. I don't know. Like, if we enter into a bear market, which is very possible, maybe that happens. Yes, Robinhood's going to take a massive hit, but so is everything else, which is why the analysis is just like so intellectually mediocre, which is the politically correct way of saying really stupid. Like, oh, we get a bear market, Robinhood goes down. Yeah, and so does everything else. That's how you think Rocket Lab's holding 65 in a bear market. I think Nvidia's even getting be close to 180. I think the S&P is going to be pushing almost 690. Like, no. So like, if Robinhood falls 80, 70% or whatever these people are proclaiming, and the market goes up, then, oh my goodness, there's like a fundamental break in the thesis. But if we don't have a bear market, I mean, I think the analysis from some of these people is kind of crazy. So yeah, I think a lot of these tweets that have been going viral, I'm not even responding to it because I'm like, this doesn't make any sense to respond to it. I think they're discounting a lot of different metrics that are starting next year, a lot of different mechanisms of growth that Robinhood is rolling out with prediction markets, banking, et cetera. And I think it's over analyzing a November report when a lot of these people don't even know how to read the monthly metrics. They just see the headline that, oh, it's down month over month, therefore Robinhood must be declining. It's like, that's not how this works. Like, you have to know how a brokerage. There's 4 less trading days. You have those 4 trading days. These numbers, they have to be fundamentally analyzed through the context of Robinhood's business. And I think that's kind of the argument that is missing from a lot of these people. Vlad did a podcast yesterday, and I think this podcast also was pretty important in terms of what he was talking about with the prediction markets. So let me load this up right here. Again, I will have a Substack coming out on this very soon, and I'll be discussing a bit more about what's going on with prediction markets and how big I think the industry is. But you do have a lot of these companies that are getting pretty bullish on it. Also, what's the other company? Gemini was up 45% yesterday, another crypto stock that is building their own prediction market. And the street is giving them a premium because they see how large the market is and how a lot of these companies could tap into it.
To the product. So prediction markets is a new one for us because we were kind of out in front. And then it's sort of like, how do we maintain our lead and market positioning? And, when we have a bunch of people coming after us, it has surprised me that, you have the exchanges like Poly and Kalshi, who have obviously been there from the beginning, but like no other broker has gotten into it yet. No other broker of significant consequence. And I think they're coming, like they're seeing what we're doing and they see that it's resonating with traders and just with mass market retail. But yeah, I think we're also moving and we're adding new innovations. I think the event that we're gonna unveil on the 16th is gonna show some new things to people that they haven't seen before. And it's the fastest growing business that Robinhood's had. In the past year, we've gone from one single contract, which is the presidential election, to over 1,500. We've gone from, it's basically the volume has doubled quarter over quarter. Q3 had, I want to say 2.2 million contracts, but then October had 2.5 million, so more than Q3 put together. And then you had November, we announced some November numbers, 3 billion contracts traded in November, which is, it's a 30 million revenue in a month. So 360 million run rate if you take the November numbers. which is a big ramp. And I think, it's just been really resonating with the traders.
And sports betting?
Sports is a big part of it, but the big part of what we're doing is also diversifying the contracts. So it used to be just elections. And elections, I think, to me, is probably the most interesting. Then we added sports, and we've added a ton of leagues there.
Is it sports betting, or like what is it exactly?
I liked most people I talk to call it wagering.
Wagering. Okay.
I like the language there.
I think it's different, in all seriousness, to sports betting. And a lot of people ask about, how is it different from a regulatory standpoint? From a product standpoint, I think it's significantly different. And I haven't really done much sports betting, but what people love about it is you can actually trade these contracts during the game.
Mm-hmm.
So,
So I'll link the podcast if anyone wants to listen to it, but he goes on to further say that it's more like trading a stock versus sports betting. And the more research I've done sports betting, by the way, I've never signed up to FanDuel, DraftKings. I've never been a sports bettor. Like, I've never been in that world. I've just never understood the real appeal of it. And also I've never, liked gambling on sports. But the difference is, as I've been doing research, is that it's rigged. Like, the house always wins. And if you win too much, they can just ban you from your DraftKings account. In these prediction markets, again, the fundamental difference is it's peer-to-peer. There is no house. If you lose on the Lakers, Robinhood doesn't win. Someone else who took the other side of your bet wins. Robinhood just gets the fee in the middle, which means if you win on the Lakers and you do it consistently, they're not going to ban you because they have no incentive, because all they want to do is collect the fee in the middle. And so from that perspective, I think the traditional sports betting industry, I don't understand how anyone can be bullish on it over the next 10 years. Because this is where consumers are going to. This is where we're seeing rapid adoption. This is where you're seeing a lot more, from a psychological perspective, the ability for people to trade in and out of these contracts. And it's just more exciting to a lot of people. And even if you consider it gambling, it's a way better form of gambling than the house being having a built-in VIG to consistently make sure they get their profit. So the point is, I think there is a world, and I'm in my research, this is what I've been seeing. I think there's a world where there will be prop trading shops, prop hedge funds that pool tons and tons of money, and they trade these prediction markets just like they're trading stocks. I really do think that's going to be what we see in the future. And I think Vlad knows that that's happening. I don't know what they're announcing on the 16th for their prediction markets event, but I hope it's a desktop version of the app, because that would really make them more competitive with the other guys. But I think a lot more institutions are getting into this game, because if there is something that can be traded, whether it's gold, silver, soybeans, corn futures, Nvidia, Bitcoin, Ethereum, Fartcoin, if it's something that can be traded, money is going to find it. And if it's regulated, which these contracts are already regulated from the CFTC, then the regulatory framework just means that more money can enter into it, because most institutions are regulated. So I think it's a massive industry. I think it's going to grow next year. Even if crypto takes a hit for Robinhood, that could be one of the verticals that they continue to make more momentum on. And so we're going to see how that plays out going into the end of the year. All right, folks, we got 30 seconds. Thank you, everybody, for being here. We got through another week of December. Again, I will be live tonight at 7:30. We'll be doing another stream with some more details on the future of the channel for 2026, the future of the meetups next year. So we'll have a lot of updates on that. I mean, it's been a good week so far. Some of these names have not got back to their all-time highs, but the S&P, hard to complain. Trading at these levels. We're going to see when the market opens if the Broadcom earnings really do affect it. Again, for those that are just joining, Nvidia headlines came out this morning. It looks like China does want a lot more H200 chips. That's why Nvidia's green. And now we're going to get to see if the market cares as we get into the market open. Friday, December 12th, 9:30 a.m. Thank you, everybody, for being here. I don't have my bell because I'm an amateur at this, even after 3 years. It's in my book bag because I came from my parents' house last night. So give me 10 seconds. 1 second. Okay, the stock market is now open. I think you do this after 3 years, that you'll be more prepared. All right, 687.93 on the S&P 500. That is down about 0.17%. Robinhood up from 122 yesterday. That's at 125, 1.3%. Nvidia, that's up 0.42%. Grab is up 0.58%. Palantir, 185.33. That is down about 1.1. Aurora Cannabis and these weed stocks. Again, Trump is thinking of making marijuana a Schedule III drug on par with prescription 3 level drugs, prescription medicines, which are Schedule III drugs, which is why these stocks are ripping higher. That means you'll be able to get prescribed weed if you have any issues, which is quite incredible. So that is why those stocks are getting moved. Costco down 1%, Lulu 12%. CEO stepping down. Street likes it. That's up 12% of the day. Oracle still down. Broadcom. Wow, Broadcom. 7% down on Broadcom. That's a little aggressive. $31 on Broadcom. 375.90. 1.78 trillion. Just lost, what, 35 billion of market cap? 33 billion? 7.72, 375.20. Let's see if that dip gets bought up. Is that affecting the S&P? I mean, barely. It's barely affecting the S&P. Nothing. 688.48. S&P's down 80 cents, while Broadcom's down a lot. And Broadcom, I think, is in the, correct me if I'm wrong, I think it's in the top 15 holdings of the S&P. So it's definitely a player here. And that's why Amcor is getting hit right there. Amcor is a big supplier with Broadcom. Google might be getting hit because of this as well. Google's actually green. Okay, so Google holding on, even though Broadcom is down. We talked about Broadcom in the morning. Again, I don't think fundamentally they deserve to take a massive hit. The problem is they said two things. Their non-AI revenue is going to be flat year over year, and then they said OpenAI is not going to be generating any revenue for them in 2026. So they admitted that they have a big OpenAI partnership, but they might not get any revenue for OpenAI next year. Maybe they'll surprise to the upside. Maybe they're just being conservative. But those two things alone, along with the fact that the stock was up 80% going into the print, that is why I think it's getting hit right here. Down 8% on the day. We'll see if that gets uglier. But Broadcom right now, not a horrible quarter, just not a perfect quarter. And given their multiple, they needed a pretty perfect quarter to keep that going. Netflix getting a move. That's up 2.2. One of the reasons Netflix may be getting a move, and this is very unofficial, but nonetheless, maybe the market is potentially pricing this in. Prediction markets have Netflix at only a 36% chance. Paramount now has a 50% chance of closing the Warner Bros. Acquisition, which technically is bullish for Netflix because if they don't have to spend $90 billion on a company, you know, that might be better for the stock. Granted, the future of Netflix might be better if they spend that $90 billion today, but you might have the street thinking that they're not going to get Netflix or not going to get Warner Brothers, and that's why the stock is up. Now, maybe it's the opposite. Maybe the street's getting more excited because they think Paramount's not going to be able to complete the deal. But you have two different ways to interpret how Netflix is moving right here. Nvidia getting some momentum, 182.26. Robin at 125. It bottomed yesterday at 122. We'll see if it can hold that level. Tilray, that's up 35%. Rocket Lab, just a freaking rocket ship. Barely down on the day, 63.28, up from that 61 level in the pre-markets. Broadcom continues to get hit, down 8. Continues to get hit as that one is not able to hold its momentum from yesterday. SoundHound, what do we got on SoundHound? That's up 4%. Nebius is up a little bit. Again, the news on NVIDIA is that China is reportedly seeking more production of the H200 from NVIDIA because of increased demand, which is obviously very, very bullish because none of the China revenue is baked into NVIDIA's guidance. So if they get any bit of revenue, even if it's a couple billion, that would be a massive beat for them. Oracle right there going down 1.3 as well. Looks like Broadcom's taken Oracle with it. Costco is also down 1%. Rivian unveiled their own chip. They're moving off of NVIDIA's platform and they're building their own chip in-house, which they say is, I think, like 4 times faster at what they're trying to do inside their vehicles. So I guess Street likes it. That's up 5.72%, and they had their AI day yesterday. That was getting investors more excited. SoFi, green, 27.22. How about Tesla? Tesla's 452. That's up 1.3. Tesla's been chilling around this 430, 450 level for the past, realistically, 2 weeks now. And it feels like it wants to break out closer to that 465 that it was at a month ago. But right now, holding 450 is not horrible. Iren, that's flat. Now, Iren is, you know, I know people who bought Iren at 60, 70 probably don't love the price action. But if you bought Iren, you know, in the 20s or 30s, you got to be happy with the consolidation. Like, I feel like it's like, I think at 70 and 80, most people understood, hey, this thing is up 8x for the year. You know, maybe it's a little aggressive. Now it's up 4x for the year, which is still aggressive, but it's consolidating. Same thing with Nebius. I mean, Nebius been chilling in the 90s, 85 to 90s for the past 3 weeks now. I don't think that's horrible. It doesn't have to jump to 140 immediately. I think it's developing a new base of investors and actually gaining some momentum here inside of these levels, which will allow it to make the next leg up. Same thing with Iran, and then potentially same thing for CoreWeave, that is down 50% from those highs at 150. 87 on CoreWeave. Basically flat on the day. Applied Digital, this one as well, that's up 1%. This thing was pushing 35 earlier this week. This one's still up a lot year to date. Lulu's still up 10% on the day. SoundHound did get a $15 price target this morning, and that's why they're getting some momentum. Ondas, how about this one from a drone perspective? Flat, but that one also up 250% year to date. Hoodie 124, S&P barely budging, 688.55. I mean, we're there. We're basically at all-time highs. We're very close to 7,000. Tom Lee says 7,700 next year, which is 11% upside. He's not being uber bullish, but he is expecting a decent level of upside. You have some other firms like Oppenheimer coming out at 8,100. And I think a lot of it is going to depend on how aggressive we are when it comes to actually lowering rates. AMD is up 222. That goes green. The China news for Nvidia should be good for AMD regardless. 181 on Nvidia. Rocket Lab, are we still holding on? Wow, Rocket Lab goes green again. 63.50 on Rocket Lab as it's holding on. Google right there at 313. Broadcom, are we still tanking? We are. All right, we bounced from 372, 424 to 377 though. The shorts definitely won today on Broadcom. Pretty ugly reversal, but also kind of expected just given how high they've been trading this year. Amit, you look like a failed poet. That's actually a good one. That's a failed poet. It's low-key legit. That is definitely a way to describe it. I'm trying to think of a poem right now that I can say, but I think I'd rather not. I'm trying right now on the top. I got the pressure to come up with a poem that would be funny. I'm like, all right, roses are red, violets are blue. I like the stock market. How about you? Okay, that was bad. That was so bad, but it's the attempt that counts. It's the attempt. You got to try in life. You got to try. When people don't try, they don't have a chance. Make it about Massachusetts. Oh my God. I don't know what the hell rhymes with Massachusetts. Bitcoin right there, 92.5. 92.5 on Bitcoin. Where's ETH? ETH 35 to 3,200, which is leaving BMNR at least holding 30. I mean, the fact that BMNR is holding close to 40, I'll take it. Up from 23 3 weeks ago, I will take it. Even if we did get to 42 yesterday as well. So it's not horrible here. It's not horrible at these levels. Wow, Tesla 458. I don't think there's any news on Tesla outside of Elon tweeting yesterday a lot about this whole data center and space thing. I don't think there's anything specific on Tesla. I think we got some price target upgrades earlier in the week, but nothing right now. Rivian is hitting a new all-time high right here. Not all-time high, but new high for the day. Elon mentions convergence between Tesla, SpaceX, and XAI once again. Okay, I don't know if this is the reason why it's pumping, but maybe. Yeah, but it's underneath the comment around data centers in space. Tesla AI chips, SpaceX satellites, XAI's Grok AI. I mean, we talk about data centers in space. You need AI, you got XAI. You need the satellites, you got SpaceX. And then you need the chips, you have Tesla with what they're doing with the training. So you do have a lot of things that could come together to make this happen. I do want to remind people, though, we talked about this yesterday. SpaceX revenue is $15 billion. This is why Elon is pumping the space center, the data centers in space narrative, because I don't know how you justify a $1.5 trillion valuation with $15 billion in revenue. Could you theoretically sell that to the public? Yes, but it's easier if they have a story outside of Starlink to be excited about and going to Mars, which might not be a story that manifests itself anytime soon. And that story is data centers in space. So I think if Elon is serious about getting SpaceX to go public, he's going to be really bullish about this narrative. And that will probably get a lot more people interested in actually buying SpaceX stock. Rivian right there, 13% on the day. So it looks like the street was happy with their news around their AI products. And you're getting Rivian to have a decent chunk of momentum right here as it's green. I don't really understand what they're doing with this new chip. I mean, we listened to a little bit of it yesterday. Obviously, I didn't dive super deep into it. I don't know how that's going to help them sell more cars. Or if they're switching from using the car sales and the lack of profitability they have on the car sales, which has been 5 years, they cannot make a profit, to something different. But did Rivian become a tech company yesterday? Because just because you make chips doesn't necessarily mean that you have the street can view you as having the potential to generate SaaS-like revenue with nice gross margins, which obviously the whole thesis on FSD is that that's what Tesla is able to do. So I'm not sure why it's getting the move right here, but it is getting a 12% hit to the upside. And you got Rivian at 1843 on the day. Nvidia trying to get to 182, Oracle 194. Oracle is still dumping. It got back to 200 yesterday, cannot hold it. I feel like Broadcom's still down. Yeah, Broadcom very close to the lows of the day is 374. That's down about 8%. DraftKings up a little bit. Planet Labs continuing to have a great week. It's up like 40% for the week. Silver continuing to do well. Uber at 85.89. Warner Brothers, look at that, 29.90. That is very close to the acquisition price. And Netflix is pumping at the same time, up 3%. So either the street is bullish Netflix buying Warner Brothers, or it's bullish Paramount getting Warner Brothers so Netflix doesn't have to spend the money, and that's why Netflix is pumping. I feel like there's two ways to make the argument, but there's not Netflix did have some they're introducing like some new studio in Texas yesterday. I don't know if that's enough to get the stock up a lot. But I guess that was one headline that they had as well. Netflix is opening a 100,000 square feet place in Dallas where fans can explore, taste, play, and shop favorite shows and movies in real life. Is this kind of like an amusement park? I mean, it's not an amusement park, but it's kind of like a entertainment destination center. Okay, I don't know if that's enough to give this a 3% move, but that is one of the headlines that we have. Nike, wow, Nike also getting some love, 1.7. Maybe the street's getting a little bit more bullish about the Supreme Court getting rid of tariffs. Wow, Tessie, she's pushing 460. Let me check resistance there at 460. But Elf, Nike, a lot of these names that could benefit from their supply chains in China not being taxed aggressively or tariffed aggressively. And Trump has kind of all but admitted the Supreme Court's going to overturn the tariffs. So maybe that's getting the market excited. Goldman Sachs S&P target 7,600. Okay, we're gonna get a lot more of these targets coming into the next coming weeks. Goldman Sachs at 7,600. Tom Lee at 7,700. 460, 102,000 shares, folks. 102,000 shares at 460 for Tesla. Adobe's getting a move, 357. That's up 2%. They had a great earnings. Street didn't react too much, but they had a great earnings. Wow, Broadcom, new lows, 371. Street is not happy with some of Hock Tan's answers. And again, this price action, I don't think is bearish Broadcom, the company. It's just that quarter, as good as it was, left some concerns around A, guidance for fiscal year 2026 AI revenues, which they did not increase. And then B, the lack of OpenAI revenue that they explicitly said they're not going to see in 2026. And that might be taking Google down with a 311.40 on the Googs right here. Amazon's down as well. Dude, Amazon, we should rename Amazon to instead of Amazon.com, it should be called Amazon stablecoin. Because if you look at the stock price, look at this. This is a stablecoin. It's just like this thing doesn't move. I mean, if you're selling calls on this thing, if you have a ton of shares and you're selling aggressive calls every week, you're surviving every week and taking money from the call buyers to do nothing other than sit and hold a stock that is one of the greatest companies on the planet that's just not moving. PayPal is the other stablecoin that's out there, but PayPal doesn't have as good of a premium as Amazon. It's also not as safe as Amazon. Like the fact that you can hold a company like Amazon, which should be a relatively safe investment, and milk it for premiums every week and not be worried about it getting called away. And the one time it gets out of the money, you're like, oh, don't worry, it'll come back. Like you can't do that with a lot of the Max 7s. But with Amazon, like I'm not running any covered. I'm honestly scared to run covered calls on Nvidia. I have zero covered calls on my entire Nvidia position, which is honestly thousands of dollars a week that I'm missing out on, but I don't trust it. Like I really like a 185 call. Nope, no way. Even 190. I'm like, this thing could move instantly. I mean, it was at 190 on Monday. Like imagine you had cover calls, or sorry, on Tuesday. Imagine you had cover calls on Tuesday at 190. Like you'd be super scared because what if, fundamentally it deserves to trade there. And then if they have any external catalyst that gets it there, it's like, boom. Then you're kind of screwed on the calls. But with Amazon, it's not as big of a concern. Rivian still holding 12%. BM&R still down. Broadcom, once again, lows of the day, 370. 370. Yes, Grab is also the biggest stablecoin. But Grab has no premiums, which is the problem. It's up 2% today. But if you're holding on to a lot of Grab shares, unfortunately, there's just not a lot of premium to milk out of it. Nike right there up 2%. Adobe up 2.5. Broadcom, wow, it touched 369. Dude, that's a freaking $50 reversal from the highs of last night. A $50 reversal, losing 370. Touch 369 again. There you go. 2 times touching 369. We'll see if it can bounce right there. Is anyone buying the dip? Anyone selling? Anyone? I don't know. Do you have any option strategy on Broadcom? Selling puts, selling calls? When's the last time we were at 369 on Broadcom? Last time we were here was November 24th, right before Thanksgiving. Wow, so we basically had a 10% move from November 24th to December 12th. And then the last time before that, we're at what, 369? Last time we had before November 24th was basically end of October, early November. So you're basically getting back to 1 month prices or 1 month ago prices, which is not crazy. 368. She's falling. She can't get up. I'm trying to think of a poem right now. Dude, I'm trying to think of a poem to describe Broadcom. You got me on this poem thing. Roses are red, violets are blue. Broadcom is down 10%. Someone needs to sneeze and say achoo so Broadcom can get some blessings so that it goes up. Okay, see, it didn't, like, it makes sense, Philip, like the poem makes sense because Broadcom needs some blessings and achoo rhymes with blue. The problem is achoo is not the punchline, and I had to explain the rest of it, which is why it became very cringe over the past 30 seconds. But the point is, in life, the attempt is what matters. The attempt is what matters. If you don't try, you don't have a chance. So it didn't work. That time it did. I'll be honest, that one failed. But you got the intent of what I was trying to do. And the achoo rhymed with blue. It's just I didn't have enough time to think about it because I'm doing a live stream right now to really make it make sense. And the blessings part made sense because you need some blessings because the stock is down 10%. So like the framework for this to work was there. It just didn't come together. But the attempt in life is what matters. How do I unsubscribe? Okay. Anyway, Tessie, 458.40. 458.40. Rocket Lab, is she really going to push 65? Is she actually going to push 65? Resistance on 65. 38,000 shares. 38,000 shares on Rocket Lab. Dude, I just like, dude, I love Rocket Lab. I think it's a great company. I've been long since 25. I did not expect a 40% move this week. I really didn't. And it is amazing to see that given this SpaceX narrative. Now, granted, the SpaceX narrative and the IPO goes away. Maybe you see a drawdown on Rocket Lab because I think that's what's propping it up. But then again, Elon's obsessively tweeting about these data sets. I don't think that narrative's going away. I think he's pushing this thing because he knows to get this thing public, you need a big, big story. And that story is going to encompass Rocket Lab, ASTS, and all those guys, Redwire, etc. And the street's liking it. SoFi goes red, 26.97. S&P goes red. All right, so you're actually getting a move on the S&P. That's down about 0.25%. Nvidia goes red as well. Is this because of Broadcom? Broadcom still down 9%. We did hit 368. It's trying to keep above 368, $36 down on the day. Amazon goes red by 1%. Grab somehow holding up. Applied Digital about to go red. CoreWeave goes red. Nebius goes red. Iren goes red. Costco still red. Hoodie very close to going red. Palantir went red, 2% down. Lulu's up 12. Lulu's, I guess, your hedge today against tech. And then Oracle down 2%. Is there a headline? The Qs are down. Qs are down 1%. Okay, let's see. Let's see if there's something we're missing or if it's just Broadcom. Tesla's also holding on at 4. It's weird. Tesla's not getting hit with the, wow, Tesla breaks through 4. What a weird day. Netflix is up 2%. Warner Brothers is almost at the acquisition price. Rivian's up 18. Tesla's at 460. Broadcom, explainable, down 9%. And then Amazon falls with it. Google falls with it. The Qs fall with it. Tesla's like, if Tesla was down 3%, the Qs would be down almost 1.5% today. It's holding up pretty nicely. It is option expiry day. That is correct. Today is Friday, December 12th. So you have, now it's not like quad witching or anything where you have like trillions of dollars expiring. So, but you do, yes, you do have options expiring. Wow, 461 on Tesla. Adobe as well. It's looking like a little safety play at 359. Salesforce also somewhat green. Where's PayPal? PayPal green. Nvidia just flipped green. A little weird price action right here. Not really able to get a consistent narrative. Hoodie just flipped green again. You got a lot of stuff moving back and forth, but I think Broadcom being down is kind of the major narrative. No, Broadcom's a little bit of a bounce. It was down 10. Now it's down 8.5, 1.5% move right there. Kind of holding okay. Why do you think it's weird that Tesla's up? Well, there's no headline for Tesla and the Qs are down. So like what's pumping Tesla? Again, Tesla's a big part of the NASDAQ, right? So if the NASDAQ's down and Tesla's going opposite the NASDAQ, it's super bullish Tesla, but like why? I guess is the question. And I don't see a reason for why. The poem worked. Okay, I'm not going to think of a poem for Tesla. I'm not going to do it. I'm not going to do it, even though my mind's already running, but I'm not going to do it. But the attempt is what matters. You got to try in life. You have to try. No, I don't see any headlines, dude. Nothing for Tesla. Oh, I mean, someone says FSD is solved. Look, I will say, I don't think it's pumping just because of FSD today, but when I drove back from my parents' house this morning, again, FSD is getting really good. And it's letting me check my phone more, like 13.9. Again, you try to check your phone, it gets really, like, now it's like you can actually, like, I think Tesla's getting confident enough that they're not going to crash, that it's not unsupervised, but they're not being as crazy if you look at your phone, which is, you know, Elon said his goal is people should be able to text and drive and not worry about anything. And that's when there's a real unlock. So I'm loving 14.2. Like, I'm absolutely loving it. And it's just a joy to be in that car. Now, I don't think that's why the stock's up today, but that is a exciting reason for momentum going into 2026. 3.3%. We did hit 463. We did hit 463. Peggy said, I asked Gemini for a poem. It wrote, roses are red, violets are blue, the Dow is in the red, and so is my portfolio too. See, that's not a horrible poem. It makes sense, especially if your portfolio is red. It rhymes and it makes sense. PayPal right there, 61, Adobe 359, then Tesla 462. Yes, Waymo is obviously putting up better results than Tesla. We talked about those yesterday. 14 million paid trips. They're targeting 1 million paid trips a week. The argument from the Tesla bulls, which is, you know, a lot of people discount this argument, but nonetheless, it is an argument, which is Tesla's FSD is going to be so much better than anything Waymo can come up with what they're doing with LiDAR, that once they flip the switch and you have millions of vehicles on the road, it is going to wipe the floor with Waymo. Because people are just going to want to pick a robotaxi over a Waymo. And Waymo has 2,500 vehicles doing 14 million trips. Tesla's going to have, essentially in the bull case, 10 million vehicles doing a lot more than 14 million trips. That is the bull case for FSD. Now, obviously, there's going to be a lot of nuance to that, but I think that is why Tesla continues to get this premium. Rocket Lab right there. We touched 65, 64.55, still up 1.5%. on the day. Also substantially cheaper. Yes, I mean, the cost per mile is going to be the big competitive advantage, which is why I think the street continues to, put up price targets closer to 500, because they're just like, look, the math makes sense. It just has to work. And there's probably going to be a lot of nuance to the math once it gets rolling, but Tesla's really not at that Waymo level scale yet. But once it gets there, it should ramp up way faster than Waymo's ramp. And then the question is, do consumers pick it over Waymo? Which time will tell. But it's going to be very important to see how it plays out. Netflix, this one, 96, still holding 2.5%. Remember, Netflix is still down from 130. So this one has a lot of room to go back higher if it ever gets that premium multiple again. Still trades at a 40 PE. It's not like it's not getting a decent multiple here, but it has erased most of the gains of 2025. Serious question. What will happen in times without demand when you're going to have millions of robotaxis and Waymos on the street? Well, there should always be demand, right? Like if Uber's earnings for the past 10 years have showed us anything, transportation demand is not slowing down. And you got more and more people. I mean, there is a macro argument for why demand for robotaxi should go higher. I mean, we looked at it a couple of days ago. The cost to buy a car is increasing. Average price for a car now is 50 grand in the United States. So the idea that people just say, hey, if I can pay $1 a mile, less than $1 a mile potentially to get to where I need to be in a very private and safe experience versus buy my own car and avoid the monthly payment on it. I mean, theoretically, demand should be there. Yeah, and then the whole argument that the cars are going to be like data centers when they're not being used, that are just continuously training and essentially being used for inference, which would actually be very exciting for the overall thesis on making the AI better and better for FSD. Tesla still holding 466, Broadcom or 462. Broadcom, she's trying to hold 370, but she's barely holding on. So Broadcom red, maybe that's enough of the pain. I mean, is it really going down 15%, 10% down on a $2 trillion company is a lot. I think you might have buyers stepping in. AMD just went red. CoreWeave's down red. Iren's red. Then SoFi back to green. Yeah, Rivian did dump during the announcement yesterday, and now it's pumping today. I guess the market needed some time. Wow, Rivian, $19. Jason's going to be happy. Jason loves his Rivian. So maybe we're seeing that. HIM's also up 2.5%. This one has been stuck under 40 for like the past month. A lot of the excitement has died down on HIM's. It's kind of crazy, right? How a stock is like, everyone's talking about it, and then boom, price action sucks and people stop caring. But that's almost exactly what's happened with HIM's. PayPal right there, 61.69. And then UNH also making a little bit of move right here, up 2%. The Wall Street Journal reported that Congress is likely to take a vote on the ACA subsidies next week to extend them, which is super bullish. Oscar, UNH, CNC, Elevance, all those companies. Oscar right there. Look at that. Oscar's up 4%. So if that vote gets extended, then that would be bullish for these insurance companies. Broadcom target is 350, then I'll buy. Does anyone have a specific target on this? 350? I mean, I don't know if we see 350, dude. Now, granted, Broadcom's still trading at a trailing 12 months 77 PE. I just don't know enough about the company to say if that's Nvidia's trading at 44 times. Like this is like, and Nvidia's going faster than Broadcom. This is why I think some of that money might rotate. It doesn't mean Broadcom deserves to go to like 300 though, but yeah, maybe 350, 310, 320, 350 sounds about right for Broadcom. See, the crazy thing is S&P is basically 687. Let's call it basically at all-time highs. 689, 690 was all-time highs. It's at basically all-time highs. Nvidia's not at all-time highs. Broadcom's down 10%. Oracle's down 30%. Hoodies at 125. I mean, you got Tesla kind of pushing all-time highs, so I guess that's consistent. Google's all-time highs, that's pushing the consistency, and Apple. So Tesla, Google, and Apple are kind of matching the S&P price action. Amazon's doing nothing. Microsoft's been down for weeks. Microsoft was at freaking 550 at one point. It's at 480 now. And then Nvidia stuck at 180, which just means broadening is occurring, which is healthy. It's just not necessarily top heavy inside of tech. Which, let me ask this question right here, because I'm reading a lot more analyst reports, and this is the sort of take they're going with. It almost feels exactly like 2024, which essentially was, do you think tech leads in 2020? I should not say tech, Mag 7. Do you think the Mag 7 leads in 2026? AKA the top 7 companies in the world, call it top 10 companies, whatever, those big tech companies, do they lead performance next year? Which for the most part they have this year. I mean, I know Meta and Amazon have been flat, but Microsoft's still up for the year. Google, massive. Nvidia still 35%. That's a pretty massive move. And then Tesla has done very well. And then Apple, Apple's freaking all-time highs. So I don't think the Mag 7 trade didn't work this year. It's just not all of them participated. And then if you include Broadcom and Palantir and like that Mag 10, along with AMD, they all had a great year. So if you extend it from 7 to 10, I mean, massive, massive year for those names. Where's IWM for the year? IWM, a lot of you guys think small caps will lead next year. IWM year to date is 16. Yeah, I mean, IWM is neck and neck with, you can't say, like a lot of the people that said small caps are going to lead in 2025, that didn't happen. If anything, small caps did exactly what the S&P did. And, small caps are just catching up to the S&P over the past couple of weeks, thankfully, because we got the rate cut. But it's not like in March, April, May, June, July, if you were long small caps, you were getting a better deal than for the risk you were taking versus buying Nvidia at $100, right? Or Google at 150. So I think that's gonna be a big theme next year of just like which one ends up leading. Now, obviously, if you were in very specific small caps, you've done well. But this is what we were talking about yesterday. I don't like IWM as a bucket. I like if you want zero like due diligence on small caps and you're just playing the thematic of lower rates, debt being refinanced, and better earnings growth, then yeah. But there's a lot of junk in IWM. So I do think being selective here is very important. Now, KRE, regional banks, I think this is 30% of IWM. This has been doing great. So you've had the regional banks after that scare in October of private credit, TFC pushing 50, that have started to pick up. Also XBI, which is the biotech ETF. Biotechs are coming back. Now, I told myself I can't touch biotechs because I don't have a good history with them. And I just think in general, you need to do a lot of research. But if you just trusted that the thematic would play out, double the S&P this year, 35%. You don't have to know anything about the drugs or what they're doing or the patient trials. You just have to bet that biotechs would be the trade for this year. But again, there's risk. There's a lot of more risk to biotech. Celestica has been a great stock this year. This is a Canadian stock, which I found out about. Why is it down 9%? I don't know. It's up 242% for the year. There's got to be some headline around Celestica getting hit today. Is this tied to Broadcom by any chance? Because don't these guys... No, I don't think this is a Broadcom thing. Maybe I'm wrong. I'll see if I can find a headline here, but this is down 9%. They are? See, I felt like I read something a couple of weeks ago that they are tied to Broadcom. I think there's some correlation inside of their businesses. Rubrik's getting dumped today. RBRK, yeah, that's down 5%. That did have a massive move after earnings, 20%. S&P now actually going red. All right, this is like a legit candle on the S&P. Wow, Broadcom, she's leading the way. New low of the day again. Guess Street's not done selling it out. Street's not done selling it off yet. Why is Tesla ripping? I do not know. I wish I had an answer for that. I wish I had an answer. If anyone has an idea, let me know, but I don't see anything for Tessie. Okay, I'm taking off this scarf. It's getting hot now. I was warm for the past hour. Let's see if we have any macro data coming in. I don't think we get consumer sentiment today. We had some Fed talk. Goolsby, we talked a little bit about him in the morning. His Fed speak was relatively dovish, not super bearish. Yeah, you're not seeing that many conflicting headlines here outside of Broadcom. Micron does not have earnings today. Micron has earnings next week. Yeah, it's a Friday. Usually most companies don't have earnings on a Friday. Micron, next week we have FedEx, Nike, Micron, Lennar, Accenture, Carnival Cruise. So those are the companies for next week. What was I going to say? What was I just about to say? Oh yeah, GPT came out with a new model yesterday, GPT 5.2. So, by the way, Broadcom 367. My goodness, still down 10%. The model seems relatively bullish. It's beating Gemini 3 on all the benchmarks. I haven't played with it too much, but you do have a new model that came out, so that could get the street potentially a bit more excited about the progress of AI, but you're not seeing that reflected today. Nvidia goes below 180 again. I really wonder how we're gonna set this up for the end of the year. A lot of dicey action back and forth. I think the simple way to explain it today, Broadcom's taking it down. Broadcom, again, a new intraday low. This thing is just the falling knife right here. I don't know, maybe this is where the knife stops falling, but any buy today has been not rewarded. Level of street support at this point. Dude, is she about to go below 367? Goodness, 9.5%. So that's what, about 40 billion market cap. Any interest in cybersecurity stocks, given how important they'll be in AI? Yes, I think there's a very important correlation between the amount of phishing attempts and just the nature of how AI will be used to hack and essentially weaponize against corporations, sovereigns, etc. I just don't know what's the best way to play it. Like CrowdStrike has always been my favorite, but CrowdStrike does trade at aggressive multiple. Palo Alto is obviously up there. The best ETF is HACK if you just want to be long the sector, the hack ETF. The problem with cybersecurity is they're not growing. Like those stocks, like if you look at the growth rates, it's like 18%, 20%, which is amazing growth, but those are not like 60%, 80%, 40%. So, and they already trade at multiples. So they're like important in the portfolio, but I don't think they're outperformers next year in a meaningful way, especially because they've done well this year, unless they reaccelerate growth, which I would have to know a lot more about cybersecurity to think that demand would allow them to reaccelerate that aggressively. But they are exciting names. Wow, new low on Broadcom again, 366.40. 366.40. Okay, so Street keeps selling it off. It's 30 cents away from losing 366. Oh, by the way, ARK did buy like 130,000 shares of Hood yesterday. So they did step in and they bought the dip on that. I don't know if they own Broadcom, but I wonder if they would take advantage here. Google falling with it. Good, but see, Google falling with it, this is stupid. Like Broadcom helps Google make the TPUs, but Broadcom said nothing negative about the TPUs. It's just because the street has bucketed these two together. If Broadcom goes down, Google goes down. But there's no real correlation in any significant capacity given the earnings call outside of the stock price. So it is weird that Google's getting hit, but nonetheless, it is getting hit. Amcor probably is down on the day as well because of Broadcom. Yep, Amcor down 3%. They actually are a big Broadcom supplier, so that makes sense. Robinhood right there, down 2%, 121.47. As that goes red. Restoration Hardware, I think they beat on the top and the bottom. They're up 11%. So this one got a bit of a move, which is nice. That and Lululemon are the ones that kind of are making a move here today. Netflix still holding. Are Broadcom numbers bad? No. So the reason they're having a drawdown for those that are still confused is they said two things. Number one, their earnings for their revenue guidance for non-AI revenues, which is $4.5 billion, still a big part of the business, that came in flat year over year. They blamed it on seasonality, but nonetheless, it's flat. Number two, they didn't increase guidance for AI revenues for next year. They guided for Q1, but not for the full year. So Street's kind of wondering, hey, what's up? Why can't you give us full year guidance? And number three, and I think the most importantly, they said OpenAI is not going to be paying them a single dollar in 2026. Now, they could be sandbagging, but given some of the concerns we've seen about OpenAI maybe not having the money, code red, yada, yada, maybe OpenAI said, hey, we need a year to make some money before we commit to building out 10 gigawatts with you guys. The scary thing is in 2027, if OpenAI comes out and says, yeah, Broadcom, we actually aren't ready to pay you yet, that's when this thing starts getting a little ugly. Same thing with AMD. They can make that argument as well. There's actually a good take on this. Let me pull this up right here of something I agree with as well. But yeah, I think that's the major reason Broadcom's down. But the numbers themselves were, very, very strong regardless. Yeah, they did. Oh yeah, that's the other thing. Thank you for that comment. Broadcom admitted that an XPU is not a replacement for a GPU. They explicitly said that. That's when they were talking about the Ironwood TPUs as well. So they were kind of affirming NVIDIA's argument, which is that the ASICs are not going to replace what NVIDIA is doing with GPUs, which is what Jensen's been saying for 10 years now. And he keeps saying it and no one believes him. But that was the argument that Broadcom made yesterday as well. Yes, VIX is still low, getting a little bit of a bounce. You're not seeing a VIX spike, which is why I don't know if the bears would be right to go short right here. Like if you're going to go short, it was 3% ago, not at these levels, I think, just given you're not seeing volatility cooperate. Nvidia bouncing from 179. The healthcare names are green. Rivian, massive day, 16%. Netflix still pumping. And then Rocket Lab still holding up as well. Yeah, even Nebius is basically flat, which is not too crazy. This was one of the take I wanted to show people from Steve Eisman yesterday, who was instrumental when it came to the Big Short. And I think this argument here on the LLMs, he's super bullish AI, but this is one concern that I think is reasonable to make around the nature of the hyperscaler revenue and ultimately NVIDIA's revenue.
As they keep scaling, which is the model that everybody has, will start to lose their efficaciousness.
Why?
And when I started reading him 9 months ago, he was the only one.
When you say lose it, what do you mean?
In other words, the improvement
is going
will slow
plateau.
as opposed to increase.
Okay, which is against sort of the Sam Altman and Dario and everybody
against
else.
everybody else. And he was like a lone wolf. And I read him because he was the only one saying this. I figure, you know what? Let me read this guy just so I know. This is not my field of expertise, but he's different. Let me see what he has to say. So then ChatGPT-5 comes out. And the immediate reaction by all these people who know a hell of a lot more than me is that the improvement in ChatGPT-5 is a hell of a lot less over 4 than 4 was over 3.
Okay.
And then all of a sudden, look, again, it's not my area of expertise, but I can notice trends in argument. All of a sudden, Gary Marcus is not the lone wolf anymore. There was an interview maybe 2 weeks ago with Ilya Sutskever, who was one of the founders of OpenAI. He's now founded his own company.
Yeah.
He comes out and he says exactly the same thing, that scaling LLM models is a dead end, and that we have to return to basic research. And then a lot of other people are starting to say the same thing. Now, I'm not here to panic people, but if this argument, the Gary Marcus argument, is right, you're going to start to see more and more people start to say this. And then at some point, companies like Microsoft, if this becomes true, they're going to start buying fewer chips. This is the foundational argument that everybody should be focused on all the time. It's like the foundational argument before the great financial crisis, where I eventually figured out that the entire mortgage fixed income market had rested on one assumption, which was housing prices can't go down. And once that assumption got pulled out, the whole edifice collapsed. So if I just run my own money these days. So, the amount of time it would take me to alter my portfolio would literally be before I walk out this door. But I'm not doing anything. I still own the same. I still own the same. I still own the same stock. I'm not doing anything. I'm not selling anything. But this argument makes me nervous.
Let me ask you this,
and I pay attention to it every day.
One of the things.
I think it's a fair point. And the person he's citing is someone that has not been the most bullish on LLMs in general, Gary Marcus. So like there's definitely a little bit of bias right there. By the way, I think we're getting some new lows on the S&P right there. There you go, 685.45. Broadcom, did we break 366? We touched it on the dot, 366, then we bounced. But there is an argument that every additional model, if it's not substantially better than the previous model, then the question becomes, do you still have all the demand for the chips, for the ASICs, to be able to continuously train these models? And then as a result, do you need the hyperscalers to continuously buy all these chips to put in their data centers if the previous models are accurate enough to effectively run all the workloads? Given the upgrades on Gemini 3, GPT 5.2, everything that Claude is doing, Sonnet 4.5, like it feels like the models will get better and better and better. And it feels like they do have a lot of improvement to keep getting. Like they're not perfect by any sense of the imagination. But at some point, right, that's the whole point of achieving AGI. Now, Sam Altman thinks he's going to need $10 trillion to achieve AGI, which is why he has all these spending commitments. Google setting up data centers across the entire world, Amazon investing $65 billion in data centers as of last week in 2 different states. Like these companies are assuming there is a long runway for training to get to, I don't know, Gemini 15 or whatever. And then boom, that's like the best version of the model ever. But if that narrative breaks, if that assumption breaks, which again is an important assumption to challenge, no matter how bullish you are, and I am very bullish, but you cannot ignore those fundamental assumptions potentially cracking. That is where you might see the overall argument for chip demand crack. I don't think it's the best argument. I think it is a argument. I don't think anything Broadcom said affirms that argument. Nothing Oracle said affirms that argument. Nothing any of the hyperscalers said affirms that argument. And if anything, we have minimum of a couple of years of a lot of that chip demand not necessarily slowing down anytime soon. TPU demand, ASIC demand, GPU demand, et cetera. MI 450 demand. But as of now, I think that is, the argument that is there. And especially, given, and again, the pushback to the argument is that Morgan Stanley said customers in Asia are more concerned about if they can get their hands on Blackwell and Vera Rubin more than concerned about a bubble. So right now, the demand for the training is just unbelievably massive. And then you have to factor in, what does FSD at scale look like when we get really unsupervised? How much training does that need? What does robotics at scale look like? A lot of different potential agentic workflows, agentic assistants that we haven't even thought about. There's not still a massive consumer-facing AI application outside of GPT. So if there is one, maybe on a consumer new hardware device or something, all of that is going to need a lot more training. Rivian right there up 17%. And that is where that demand comes out as well. He was talking about 5 to 10 years out. Yes, which is why he's not selling anything, right? Because that argument is too narrow-minded in and of itself to go against the thematic. But it's an argument, nonetheless, that you pay attention to. It's hard to sell based on that argument unless there's like really, really hard data to make the case. All right, what else do we have? Obviously, we're red on the day. Also, it's a Friday, dude. Market might just want to sell off for the hell of it because it's Friday. I mean, it would not surprise me if we reverse. But usually on Fridays, we tend to expect. There was a string of, I think 3 months from like May to July, where every Friday we were hitting a new all-time high. Now, granted, we were recovering from the Liberation Day lows, but it's like every Friday, I just remember the market closed, we were ending green. And, you went into the weekend relatively happy because a lot of our happiness is tied to the stock market. So that hasn't happened for the past couple months. I mean, I think the first week of October was the last time that happened. And then, Trump's soybean tweet October 10th, and then, everything changed. But we're going to see if that ends up playing out today on Friday. Jason tweeted, "This is the time to buy Nebius." His text emit alert went off. Well, look, I have a full position in Nebius, so I am not really interested in DCing here. Also, it's $3 below my average. Like, it's got to give me something a bit more exciting to get interested in. But look, if you don't have a Nebius position and you're interested in data centers, I don't think these prices are crazy. And I think Jason's right on the TA. Like, these are the prices where one would at least get interested. I mean, if you're waiting for 80, I think that's too greedy. If you're waiting for 75, I think that's really greedy. But I also don't think you can expect 120, right? So I think like this 90 to 95 range is not crazy to be buying here. It's just anytime you get a bad data center headline, all these stocks get hit together. And unfortunately, Broadcom down 10% ends up being bearish for the data center names. I have 1,000 shares, 1,097 average. So, I mean, this thing's got to get below 90, realistically closer to 85 to get excited to buy the dip. Fermi's coming back a little bit. Fermi right here is down 40. Now it's down 30. Is Tesla still moving? Tesla, no, 463 to 454. So this was inevitable. S&P's down 0.5%, Q's down 1%. Tesla's probably got to come down with it. So it's not red, but it is down. Carvana, 52-week high. Oh my gosh. Could you imagine if we just all went freaking long Carvana in 2022? $4. 4 to 478. I mean, how many times do you find a stock that 100x's in 2.5 years? 4 to 478. Just crazy. Trump is preparing to turn private businesses to help mount offensive cyber attacks against foreign adversaries, potentially expanding a shadowy electronic conflict. Well, that's kind of consistent with the cybersecurity stuff we were talking about. CrowdStrike still down 2% on that headline. Trump preparing to turn to private business to help mount offensive cyber attacks. Okay. BMNR goes red. Why did Tesla pop today? I have no idea. Maybe because of that AI executive order. But then again, you would think a lot of AI stocks would move on that. I mean, maybe there's, if FSD becomes a federally regulated thing, then Elon gets to sidestep state-by-state legislation on unsupervised self-driving. Maybe that is the correlation between the Trump executive order and like Tesla in particular benefiting from it. But outside of that, not sure why you would get a big move. The other interesting thing about Broadcom getting hit like this is that the street raised their price targets across the board. Now on Oracle, they lowered a lot of the price targets, but on Broadcom, as you can see right here, I mean, these are all well above 400. So TD Cowen 450, Jefferies 500, Goldman Sachs 450, Barclays 500. I mean, again, it wasn't a quarter that was bearish. It's just some questions weren't answered in the best way. I think that's why you're seeing the sell-off. Why is Amazon down? It's good old Amazon. I guess you could say that their stock price isn't delivered in a fast manner, aka it's not prime delivery for it to go higher. Again, the attempt is what counts in life. The attempt is what counts. 226, that's down 2%. I don't know. This one every day is between 225 and 230 pretty much. S&P, low of days, 685. Doesn't work without the scarf. 684. Why is she so emotional, dude? At all-time highs yesterday, now right back down. She needs to just pick a side so we can have this stupid Santa Claus rally and end out the year. What if we all bake cookies? What if we like all legit bake cookies on December 25th? Like we all agree to do that. And then metaphorically, the market recognizes that it's okay to come to town. Maybe we need to do that. Maybe we are like 0 to 4 on our attempts at poems this morning. Look, going 0 for 4 means that you tried 4 times. That's what matters. That's what matters. I think in life you have to try, and you have to have a certain number of attempts where you realize when you need to pivot. Like I was actually talking about this with my mom yesterday, and we were talking about like kind of my major in college and how I pivoted from like computer science stuff because I was just like, I just knew like I wasn't like, I was 0 for 1 on one computer science class. I didn't even make 4 attempts. I got to that midterm. I looked at that shit. It was like, what's the Python language for this? I was like, I'm out. This is not me. I took my L immediately and I moved on. Sometimes you got to be self-aware enough to recognize that many attempts at the goal are not going to lead to any level of success, and you move forward. But when it comes to humor, I think the probabilities of success are higher, which is why I keep making the attempts. And although it's 0 for 4 today, the point is it's not going to be 0 for 4 forever. Whereas like when I tried to sing back in 7th grade at the town show, I was 0 for 1. I probably should have realized in 7th grade, this is time to pivot. I didn't pivot until 10th grade. But that, that should have been more apparent to me that the music thing is not going to work out. Broadcom, low of day again, 364. Down 10.2%. Down 10.3%, 10.14% on the day. I mean, I just feel like the S&P is dumping with Broadcom here. I mean, there's not another major headline. AMD also down 2, Hoodie down 2, Amcor down 3, Rubrik down 5. Why is Rubrik down so much? Does Rubrik have something to do with Broadcom? Like, that's weird. Celestica down 10. That's more Broadcom related. Small caps down 0.5%. And then Google down 1%. The Q's officially down 1%. Tesla is bound to go red at this point. Where's Tesla? I mean, it's holding on to 1%. I think that's good enough, but it's got to really hold on to it here. Dell increasing prices on December 17th. Is that what's affecting some of the market today? Dell's down 1%. Isn't this good? That means Dell has pricing power. This shouldn't be bearish. That's like if Spotify increases their prices, like unless the street expects everyone to cancel, that's bullish. That is, I don't think that would be necessarily bad. The heat map, by the way, on the day is pretty much red across the board, except for some of the consumer defensives that are holding on. Just blame it on tariffs. Yeah, maybe today we can just blame it on tariffs. Let me pull up this heat map. Warner Brothers shares holding on. Bitcoin under 91. Okay, there you go. That's also starting to get your risk on. Downside. Fear and greed. We are at fear. We are not at extreme fear. There's no way we'd be at extreme fear. Wow, S&P 683. Okay. Broadcom gave up 365 again, 364.11. All right, so I guess the street was ready to take down Broadcom. Okay, my computer is frozen, so you guys can still see and hear me, but it needs a second because I can't change the screen. Those data centers in New Jersey are messing up everything. Crypto's down. 10:30 on the dot, maybe time to buy. Yeah, maybe that's the reversal. Why is my screen not moving, bro? Do I need to get a new computer again? Wow, Broadcom 363. Yeah, you guys can't see it on the screen. It's still stuck on Dell, but no, dude, it's still frozen. All right, we're gonna have to wait for a second. So cold, the computer got frozen. Exactly. 363 now on Broadcom. I think I have too many tabs open, but this is like the highest quality Mac you can buy. If it can't handle freaking 15 tabs, like, what are we doing here? What are we doing here? Dell prices hiked linked to demand for memory chips from Business Insider. Okay, so that might mean their memory prices are, well, that makes sense because there's been a shortage of HBM. We've talked about that over the past couple of weeks. So if they're getting price gouged, they might have to price gouge consumers as well. Still frozen. Can we please move, Mr. MacBook? Why did I pay $4,000 for you if you're not going to operate? Kind of have a show to do. It's never been, it's done this before, but it would be done in like 10 seconds. This is like legit. It's stuck. Frozen was a good movie. It was indeed a good movie. And although I haven't watched the movie, I've heard about the movie. Okay, now we're back. We're back, baby. We are back. We're good to go. Okay, let's pull this up. First of all, let's close out some of these damn tabs. Dude, I think I need to get an even better computer than this. It's getting ridiculous. Oh, the heat map. I was going to show the heat map. Okay, let me pull it up. I do have multiple computers, and it's just like sometimes when you're on the same computer, you know, you're looking at multiple tabs, and then it just bugs out. So this is the heat map. Healthcare is red, financials are red, green, consumers are green, consumer defensives, real estate's green, just tech. It's tech that's leading the way to the downside. Bro's looking for an excuse to spend money at Apple. Dude, I don't like spending money at Apple. I like when shit works. When it doesn't work, it gets annoying. And hopefully this thing continues to work. But there it is. There's Broadcom, 363.26. So there you go. Broadcom, 11% on the day, 1.72 trillion. Tesla, very close to going red now, 1.5 down to 0.8%. Amcor getting hit. Hood, way lower than yesterday. Yesterday, I think it bottomed at 122. Now it's at 120.7. Nvidia, 179. Do we go shopping here, guys? Do we go shopping? Even if it's a little nibble? Or is this just falling knives across the board? Of course they had to do it on a Friday. Of course they had to do it on a Friday. 179 Nvidia. Celestica's down 10. Okay, let me see if I can pull some of this up. Okay, for those that are going shopping, put in the chat, what are you buying? What are you buying for? We did get our Black Friday sale a week ahead of schedule, which was Extreme Fear. Fear and Greed right now is at 40. Let me pull this up. We are at neutral. Oh, we are close to Fear. We're at neutral. I think another 1% down. We probably touch Fear. Hood, Meta, SoFi, Pouncer. I did buy SoFi on Monday at like 26.83 or something. Dude, I was so tempted to sell my SoFi. I was up some good money on SoFi. Like I bought a decent amount of SoFi on Monday. I was upset. I was looking at JPal, looking at the SoFi position. And I was like, you know, I could just press one button and just take this money and run. And I was like, no, market loves JPal. He's even more dovish than expected. This is SoFi's chance to make a run to 30. And now we're at 26.77. So whoever traded JPal press conference probably traded it correctly, given this price action. I'm seeing a lot of Broadcoms. People are buying Broadcom. I mean, look, 10% down. You got to nibble if you A, own the stock, or B, you've been seriously looking for an entry. Like, I mean, you don't get 10% down on a $2 trillion company that easily. So I definitely don't blame people for nibbling. Yo, why did Trade Desk get smacked yesterday? It's up right now, but this stock, I mean, talk about an absolute stinker. Like Trade Desk for the year is down 68%. It was at 120 on February 4th, bottomed at 48 in April, bounced up to 70, and then got to 90 on August 5th, and now it's at 37. Just an ugly year and completely lopsided with the advertising tech business going to basically Meta, Google, and AppLovin over the Trade Desk. Apple 11 right there down 3%. And I don't even know if you could bottom fish on the trade desk because it's like theoretically 70% down. You should be able to, but maybe a lot of their business is just leaving to other players in that tech. I actually talked to someone who worked at Trade Desk like 5 months ago. It's like a family friend. We were at some event and he said, I worked at Trade Desk. The first time I met him, I was like, oh, what do you think about the recent, decline? And he was just like, yeah, I mean, there's a lot of other providers that just have better proprietary data right now than us. So he was pretty honest about it. And the stock just hasn't recovered since then. AMD right there, 213 down 3.5. Amcor down 3. If Amcor goes below 40, I'd probably buy again. I don't know if we get it, but if we go below 40, I would definitely be excited to buy at that 38, 39 level again. Apple right there, 278. As that's green as well. Where's Duolingo? Are we green on Duo? Duolingo's holding up, bro. That's crazy. What a day. Tesla, $3 away from going red. CrowdStrike down. Carvana's all-time highs. Duolingo holding 200. Rocket Lab still holding the 60s. Hims lost their pump. Nike's up a little bit. And then Broadcom still down 10%. Amit, are you buying Robinhood? I don't know, man, dude. I think this is if you believe S&P 7,000 end of year, this is a very easy spot to buy. Like, this is not complicated. This thing's going to be above 120. The problem is there is a massive correlation with Bitcoin, and there's also a correlation with the perception of the bull market. And those two things, doesn't mean HOOD has to go to $70, but it also means HOOD does not have to really meaningfully make a move from this 120 to 130 range, unless you're trading it for like a 123 sell, right? If you buy 1,000 shares at 121, sell it at 123. Like, yeah, I think that's very possible at these levels. And I think 120 has been really good support. But there's just a lot of volatility to the stuff that it's correlated with. And again, it's up 2x for the year. So every time, whether it's Nebius or HOOD or a Broadcom, that's up a lot for the year. These dips are opportunities, but these dips have to be framed in the context of the stock has made a run. It could keep dipping and still be a massive winner this year. And you just can't be that upset. But I also think this dip is stupid. Like why is it down? If it's down because of Broadcom, like, I get it, but that's not really an exciting reason for it to be down. S&P still down at 685, made a little bit of a move off 683. Yeah, that's a good point. Super Bowl prediction markets are going to be massive for HOOD going into Q1 as well. I mean, these guys are doing 3 billion contracts a month. I think that's just going to keep scaling. And that can offset a lot. I mean, dude, that's freaking 90 million a quarter. That offsets a lot of stuff that they may lose on options or crypto. So if anything, it keeps them stable, which is what they need given the multiple they're trading at. JP Morgan getting a bounce. JPM 318. Okay, so that's green up from 300. That's a good point. You got the yes/no event on Monday. No, that's actually a good point. That's actually a good. HOOD tends to move on those events. It does tend to move on those events. See, the question is next week going to be like a bearish week? Because if it's a bearish week, it's not going to matter. But then again, if they announce some really nice stuff, that could be exciting. SoFi 2675, Tesla 449. Right now, I'm looking to see, do we get any bounce? Because forget HOOD, but any stock right here, like, can we get a confirmation of a little bit of a bounce, even if you have to buy at a higher price? So at least you don't get stuck in a falling knife. And right now, we're not really seeing anything meaningful. I mean, maybe the S&P $1 move could be interpreted as a bounce, but not substantial enough. Is Palantir, are we still holding 180 on Palantir? Palantir, not even Palantir, lows of the day, 181. Do you like SoFi right here? I do think SoFi has been stuck between 25 and 30, and realistically 26 and 28 has been the buy zone for me. See, I don't hate it here. I am curious though, why the hell did they raise $1 billion? Dude, if Noto screws us next year and they raised $1 billion for no reason, which I can't imagine because they're too smart to do that. But if they're just raising money for zero, return for shareholders, that's going to be really annoying. It's just hard for me to believe that rates are coming down. Noto has $500 million waiting for him in 6 months if he can get the stock up, that they're not being strategic here. What date was your portfolio all-time high? We talked about this yesterday. It was October 9th, October 12th. I think it matches up for a lot of people. I mean, maybe some people recovered more aggressively, but Robin, it's still getting hit right here. Around that October 9th to October 12th time, I think it was all-time highs for a lot of people. And so that's when I think things were up the most for people. Hap 11,690. That one continues to go down. I don't know that much about the Medline IPO. It's what, 40 billion. It's going to be a relatively strong IPO, or relatively. There's going to have a lot of relative attention towards it, from what I've heard. But I've not necessarily it, and I don't know if there's going to be a big retail allocation either. So that's one to definitely look into a little bit. We've not looked at that yet. Let's get a little bit of coverage on some of the macro stuff here, and then we'll keep going from there. ETH below 3,100, up. Yeah, see, that's going to annoy BMNR, crypto, MicroStrategy, all those names. Bitcoin right here. Dude, Bitcoin was at 94 when Jay Powell was talking. It's $300 away from being below 90. ETH is $90 away from being below 3,000, dude. Just feels like falling knives right now. Where you're seeing.
That's why I highlight tariffs. What does the inflation story look like next year? Are we going to see peak tariffs? Are companies going to keep pricing it, passing it along? We're not passing it along, absorbing it. Bank of America put out a survey. They asked all their analysts.
This with Kramer, yes.
Yeah, so they asked all their analysts, their sell-side analysts who cover all their companies, do you expect companies to pass on a greater portion of tariffs in the first half of 26 than they did in the second half of 25? On the good news front, the highest bar is not impacted. So no, and there is a no, but there's definitely certain percentages that say 20%, a little less than that, says yes with no gross margin expansion, and there's a category that says yes with growth margin expansion as well. And I think part of what's in this survey is that AI is really working productivity gains at the same time that some of these negative margin impacts are happening through tariffs.
Right. The other good question out of B of A was if tariffs, basically, if there's no change in tariffs, how many of you expect selling prices to climb next year? And it's 66%, at 2/3 of analysts, 2/3 of respondents.
In terms of overall inflation and prices, but it's overall an optimistic view, I think, on companies' performance. 50% say they expect margins to increase. I would have thought that would come more from the consumer paying for higher tariffs, but those numbers actually weren't that high. So, I think it's probably a little bit more of the same of what we've seen in these recent quarters, which are pockets. If you're an RH, you're struggling with tariffs, and there are questions there on the margin impact and on the ability to pass it on to the consumer. But other companies, with big scale, like a Walmart, for instance, they're able to mitigate it and work out deals with their suppliers.
Yeah. Pretty fascinating. Meantime, record highs today for the Dow once again. Our next guest says buy high and sell low, the opposite of the old Wall Street adage. Adam Parker, founder and CEO of Trivariate Research.
Still not seeing a lot of clarity, folks, on some of this downturn, especially in crypto. A lot of it, Broadcom, once again, pretty close to the lows of the day. I think a lot of it is tied to potentially Broadcom, and then obviously it'd be just naturally being Friday. So you're getting that sell-off. Now, we did hit all-time highs yesterday. I mean, all-time highs are bullish, but all-time highs also need time to consolidate. And so today could also be a phase of locking in that consolidation. But Broadcom down 10% is not helping. Although, obviously, none of this feels net bearish in any capacity. It's just one of those Fridays. One of the Fridays tend to be a toss-up. Do we go green? Do we go red? Maybe this flips by end of the day. Maybe it doesn't. Hoodie trying to get a move right here from 121 to 122. Amazon 226 to 227. You're seeing a little bit of a slight green candle coming in, but nothing super, super aggressive. They are starting QE today, technically starting QE. with the buying of the 40 billion T-bills. And so, yeah, that could. Now, again, I don't think that's going to have a massive impact on the market, but just the broader perception for market participants is that liquidity is coming back into the system, which is important. Oh, do we have Lisa Su live? Yeah, let's go to Lisa Su. Let me pull this up.
That you will end up with a better product overall. And philosophically, I think, from an AMD standpoint, actually, if I think about, throughout my career, I look at, sort of the different inflection points on technology. Things often start, new ideas often start in a closed environment. But when you actually think about when they get big and when, a lot of people adopt, you like to be in an open environment. And, that's philosophically. Now let's talk about the business aspects of it. The business aspects of it are, we all have to make choices of where we invest. And do you want to trust, all of your crown jewels and all of your data in a closed ecosystem that, may or may not be the most competitive at any given time, or, may have, a flaw or any of those things. Whereas, you in an open ecosystem, you have choices. You can decide who is the best at any given time. You can decide, if I have my data in a cloud environment, I can easily move it to another environment. If I have my applications that are built on one chip, if there's a better chip, a few years later, you can move, quickly. That's kind of the idea of both.
What, broadly speaking, are the advantages of open? And let me throw one out. For example, in a new technology.
Okay, so that seems to be a more general interview with Lisa around open source tech. But you're seeing that little bounce we had like 5 minutes ago go right back down. It's a very choppy back and forth. It's not down to the lows of the day, but it's not holding any of the momentum that it had. Even ETH, she's really fighting to hold 3,100 right here. Maybe 10:30 reverse slam, maybe we see, or 11 a.m. reverse slam. The names that are green though, Adobe, Restoration Hardware, Lulu, and Duolingo. Adobe actually getting a lot more love today. And then Broadcom kind of leading the way down at 10%. What do we think for end of year, guys? What do we think in S&P? Put in the chat. What is your target? I mean, do we still think 7,000? Do we still think it has a shot end of year? We got what? 1.1, less than 1%? No, about 1% to get there. And we have what, 2 weeks? I don't know. I mean, maybe it could happen really quick and then it's just there. Or we could oscillate around these levels and just be stuck. By the way, IPOs, again, private markets just heating up. You're seeing a lot of attention for the private markets, private companies to become public. SpaceX would be the highest IPO at 1.5 trillion if that happens. I see a lot of 6,900s. I see a lot more 6,950, 6,900s versus 7,000. Tom Lee says 7,700 next year. He does say 7,000 end of this year. Again, but 7,000, it's like psychologically 7,000 matters, but if it's like 6,950 versus 7, like who cares, right? Like that's not that big of a deal. It's just the narrative has been for many months that 7,000 really feels like a possibility. But, if we're like 660 or 670, that's a totally different question. It's just, do we have a chance to get above some of those levels? By the way, China is unveiling a $70 billion stimulus package for chip manufacturing in the country. So that was another piece of bullish headline for the AI trade this morning. You have this piece of news as well. China's overall goods trade surplus is 21% year over year to a record 1.1 trillion. This is higher than the last full year as well, tripling since 2019. So even though Trump has tried to tariff the crap out of them, the surplus with China continues to increase dramatically. We had a 30% decline in shipments to the US, which is the steepest since August. It was the 8th consecutive month of double-digit declines. You would think that surplus would potentially turn into maybe not a deficit, but not be hitting all-time highs on their surplus in general. But it is. It just goes to show how incredible China is as a manufacturing hub, and how this is kind of why Trump calls up the new Japanese prime minister and says, hey, don't talk about Taiwan, because every country in the world is reliant on China. And you can see that from their surplus numbers, which means if anything happens to China, every country is affected. But you do have a surplus that continues to gain momentum. It was up 8% for the EU. That's correct. China is just a different animal when it comes to manufacturing. I don't think we have Dan Ives' target for S&P next year. I don't think he does S&P targets. He does more individual targets, but he did say Oracle is a buy the dip easily. And he has been saying that, well, no, he said 20% for the NASDAQ next year. So yeah, technically he does think you have a 20. How much is the NASDAQ up this year? The Qs are up 21%. Look, again, I mean, red day or green day, like it's been a hell of a year, dude. 20% on the Qs, like, which means a lot of these individual stocks, Google, Tesla, Apple, obviously Nvidia, Broadcom, AMD, they've done a lot more than 20%. So it's not like it's been a horrible year. Should have put all my money on the Qs. I mean, again, for those that don't care about individual stocks, you pick the Qs, 20% in a year. You don't have to struggle too much or stress about it too much either. JP Morgan 318, Pounter 181. I mean, you are getting a little bounce here, but it's not really sustaining. Like Hood 120 to 121 to 122, right back to 121. So a lot of these names, Apple kind of holding to 278. Google actually below 310. Wow. Lows of the day for the Googs. I would not want to see this go below 300 just because you can't be mad if it's below 300. It's still up a lot, but it's nice to see Google hold these levels. Granted, you get to 280, 290. I feel like that becomes a pretty exciting opportunity, especially for a lot of people that maybe don't have a heavy allocation to Google. But if it's down because the TPUs, that's kind of dumb. Can you short on Hood? Yeah, Hood started unveiling shorting to a lot of people. I don't have it yet, but you are going to be able to short on Hood pretty soon as it's rolling out to more people. Steve's prediction for S&P by end of year. Well, he still thinks 7,000. I think for next year, he said 8,000. Now, he said he's going to make an official prediction December 31st, but he did say he's leaning towards 8,000. And so are, a couple of the big banks that are also leaning for that. How much are you down today? 26,000. But is it not that bad? It's better than waking up in November. Dude, waking up in that second to last week in November, it would wake up and it'd be like, oh, like everything just disappeared. It's like, okay, I guess like abracadabra. The market's a magician. I guess it can all just like go away. 200,000 down, 300,000 down, 150,000. Like those days were ugly. And again, a lot of it was caused on not getting a rate cut. We got the freaking rate cut. It was a dovish rate cut. Stocks have relatively recovered to some decent level, but this is why I was talking about yesterday. You got to be grateful for whatever year-to-date gains you had, because, and this is what I'm saying, it's a really good year. Like we cannot discount. Yes, the market may be down over the past couple of weeks, but like if that is the myopic perspective you have on the market, it really, from a mental health perspective, takes away a lot of the gratitude you can have to have any gains. Now, if you load it up on everything at all-time highs, that's a different question. And at the end of the day, everyone falls prey to that. I've done that plenty of times. S&P, by the way, low of the day again, 683. And that's a lesson that has to be learned from like, hey, why did this price attract you to FOMO so deeply that now you're holding a massive bag? And that's just part of being an investor. But if you bought during April, like a lot of us, if you even freaking bought all the way up until October, Even if you bought in August and September, where we only had one time where we had a 1% dip, we had 6 months in a row with not even a single 2% move on the S&P, then you should still be up significantly for the year. And I think that's why it's like, it's been a hell of a year, regardless of the past couple months or past couple weeks of performance. But it also goes to show you how quick it can disappear, which is why the gratitude is so important. 140 liquidated from the crypto markets in the past 60 minutes, 140 million. Okay, so a bunch of longs. Wow, look at that candle on Bitcoin. 91.7 to 90.1. It's basically a $2,000 candle. No, it's actually 92.5 to 90. We have not touched below 90, folks. 80 bucks away from potentially going below 90. It's trying to hold on. But you got people getting liquidated. Mid, have you ever dreamed about the stock market? Yes, I've dreamed about CEOs as well. I've been pretty transparent about that. I don't remember any like specific stock market dreams, but I've definitely had them. But they've showed up in my dream. It is what it is. It happens. Why is Bitcoin dumping? I think it's just following Broadcom at this point. Or what time is it in South Korea? Time in South. They're sleeping right now, right? 12 a.m. All right. The Koreans are going to wake up in 7 hours. And if Bitcoin's still ugly, they're going to be dumping their, or they as they sleep, they might be getting liquidated from their perpetual future contracts. So in the next 7 hours, we'll see how Asia reacts to everything. Did you ever pitch Grab to Tanner? No, I need to do that. I need to schedule a time for me to do it. We should do that by the end of the year, maybe going into 2026. But yeah, I still need to do that. He did pitch Chime on my show, which has done well. I mean, I think he got it at 16. It's up a decent chunk from that level. 40, 50%, 26.88 right here. Just not too bad. Goolsby. Well, Goolsby already talked in the morning. I don't think the market's reacting to Goolsby. He said what he said in the morning. He wasn't that hawkish, by the way. He didn't want to cut, but it's not like he's saying we shouldn't have any cuts next year. It did surprise me, though. I thought Goolsby was going to vote for based on what I've heard from him over the past like month. You know what it reminds me of? It reminds me of like when I did debate and you'd have a judge in the back of the room before the round starts, you would ask the judge for their paradigm, like just ask the judge for how they think about, arguments, all this stuff. And there were some specific questions I would ask to get a gauge of how I would alter my strategy. And they would say one thing, and then you think you're altering towards how they want you to debate. And then you lose the round and they start giving their decision and you're like, oh, they just screwed me. Like they said they like this, and then they completely went the opposite direction. And that's how Goolsby felt. Like in October, his interviews screamed rate cut. And then next thing you know, he's like, yeah, I think inflation's an issue. It's like, okay, we didn't expect that. But that's what happened. Bitcoin, 89. There it is. 89.8. Broadcom, 361. S&P, 681. This is our dump hood below 120. This is our official. That was an ugly, everything all at once right there just fell. Everything all at once. Like things were tiptoeing around the red. That was a complete, okay, we fell off the cliff right there, which tends to usually mark a bottom, but that might not happen because maybe sentiment is getting a little ugly. The question for all of us here is, why is this happening? And if it's because of Broadcom, then okay, I guess. But I don't really see any other headlines creating that. Nvidia, definitely the algos, once you have a nasty, dramatic fall altogether like that. Nvidia right back to where it was 2 days ago, 177. Even after the China headlines this morning about increased H200 demand, it's like none of it matters. Now it's in control of how the algos are, I guess, thinking of Broadcom as the catalyst for all this. Nvidia's valuation is stupid here. No, I think so. I mean, like, We're not, we're not fantasizing about their multiples. It trades at 24 times. Like, this is not an expensive stock. I think this, if this Santa rally happens, it's going to make us fight for it. Very similar to last year. Last year, December was not the most bullish. It ended up being okay, but after a really big year and a good run, especially 6 months of not even a single % down on the S&P, I mean, you're getting a choppy December. Now, the other thing that's really important to remember, I said this over and over again, but one of the reasons December is good is because September and October tend to suck, which is why you end up getting a rally in December, or it's at least part of the reason. Not saying that September and October being really good this time means that December doesn't have to also be good, but historically, you have 2 months in a row that are bad. November is kind of stable, then December ends up taking off. This time, November was still green, although we had to deal with a lot of shit in November. November ended the month of green. So September, October, and November were still green. Oh, hold on. We got the headline. This should be the headline. Oracle down 5%. Oracle data centers for OpenAI delayed to 2028 from 2027. Oh boy, that'll do it. That'll do it. That will freaking do it. Not confirmed by Oracle. That's from Bloomberg. That'll do it. This is exactly what freaking Broadcom said yesterday, which is that we are not going to get revenue from from OpenAI until 2027. They explicitly said not in 2026. And now you're seeing Oracle. Now, but how do they get this information? Who's confirming it? Where did the headline come from? Nebius is probably tanking on this. Nebius down 3. CoreWeave down 6%. Goodness, dude. But so CoreWeave in particular is exposed to this because they have a big contract with OpenAI. So, I mean, it's basically saying the revenue is delayed. It's not saying the revenue is disappearing. The problem is the market starts to wonder, well, if it's delayed by a year or two, is it ever going to end up coming? And so, yeah, I think Nebius and Iren shouldn't be as exposed to this news as CoreWeave and Oracle. But Oracle right there down 5%. I don't think that's that big of a deal, though. Okay, so that when I'm saying that'll do it, I mean to say that'll explain why we're seeing this. Like if we're looking for a reason, that'll be your reason. But is that big of a deal? I mean, data centers are hard to build. They take a lot of time and energy. Like, okay, it's delayed by a year. That means the revenue is delayed by a year. Not the most bullish, but intrinsically bearish, like thesis breaker bearish? No, I don't think so. Let's pull up right here on the Broadcom stuff, but that seems to be the reason. Yeah, it could be construction delay. It could be a lot of things for why we might be seeing that. But nonetheless, the market's obviously going to react to it.
Months while Nvidia flatlined, so doing really well. But now even this winner is getting hit. And why do I say that? Bernstein said, quote, stocks in the AI space have suffered from investor angst lately. And Broadcom sell-off shows that angst is just continuing. The issue isn't necessarily execution, but sustainability. Broadcom just doubled its Anthropic order to $21 billion in rack shipments for the second half of 2026. That represents over 40% of its full year AI revenue concentration in just one customer. So there's concerns about that. Morgan Stanley notes these rack sales come with, quote, material lower gross margins because Broadcom is essentially just reselling components, think high memory prices from Google, other suppliers, that it can't necessarily mark up, so it has to pass it through. The company also announced a fifth customer with $1 billion in orders for late 2026. Analysts are speculating it could be Apple, SoftBank, xAI, though not OpenAI, which won't contribute meaningfully until fiscal 2027. So people are a little bit surprised about that as well. So you have questions about margin pressure, revenue sustainability after that Anthropic deal goes through, AI revenue guide for 2026 that was missing, and whether this growth is lumpy rather than durable. And they're all weighing on shares. But I'll end on a more optimistic note because you have many analysts, Jefferies, Wells Fargo, and their tech note points at just how well owned this stock was going into the print with Gemini launch. And so today is just some plain old profit taking. Guys?
Yeah, I saw a chart earlier about how tough the setup was going to be going in. I think it was a look at the Broadcom valuation against the Nvidia valuation, the PE against each other at the highest ever. So there has been this trade. It's been a big beneficiary of the Google versus OpenAI trade as well in recent weeks.
Exactly. So there's a lot in there. And then some people even say, oh, the non-AI revenue was a little bit weaker, but you don't own Broadcom for the non-AI story. You own it for the customer business. And that continues to grow, which we saw with the $73 billion backlog. So perhaps right now it's just a matter of, the high valuation and just very heavily owned going into this.
Christina, thanks. Christina Partsinevelos watching a very interesting space.
All right, that'll do it. That's your headline. I wonder how the market's going to interpret this. Oracle bounced off 185, but still ugly 5% move. Nvidia's fallen with it. Broadcom, here you go, 359 on the table. 11%, 359, there it is. Tesla just went red. That was expected. Palantir down 4. VIX up 15. So either we start to kind of maybe form a bottom here, or the VIX will continue to get a spike. And if we're spiking harder, then this is definitely not a bottom right now. Although, again, this is, you look across the board, you're seeing 5 to 7% across most names. Does that go to 7 to 10%, or does that stay right there off a Broadcom headline or an Oracle headline? I think that's the question. And to point it, if this was Monday, it'd be different. This is a Friday, so things can tend to get ugly, but things can reverse really quick on a Friday as well. I mean, but if the sort of core argument is, okay, OpenAI is delaying data center build out, like, yes, there's a general fear that OpenAI doesn't have the money, but that's different from saying OpenAI has canceled their data center build out contract with Oracle. That's just a different story. So I don't know if it necessarily has to be interpreted as bearish as the market might be thinking. Amazon, goodness, dude, this stock 226. Once again, red. We have been talking about this for a while, though, right? Like, I feel like we've brought up the topic for the past couple months now that OpenAI is a linchpin, and that's why the Disney deal, dude. Like, I didn't like it yesterday because it just feels cheesy, and it feels like there's sides like Disney characters on Sora is not what this company needs right now, in my opinion, from a growth perspective. They need to prove to the market they can pay for all this stuff. And maybe this is my subjective bias coming in, but like AI slop on Sora is not going to move the needle. Like the monetization aspect of that, like I'd rather them heavily invest in the enterprise where the real money is instead of Disney characters, so that you can give the market a little bit more confirmation that, yes, we have the money to pay for all this stuff. Because if you don't have the money to pay for this shit, and again, Broadcom yesterday said OpenAI doesn't have the money to pay us in 2026, then it just starts to bring up a lot more questions. And we need many answers instead of questions. It's not good for Disney either. Yeah, I read a couple of analyst reports yesterday that weren't the most bullish on it. They didn't downgrade Disney or anything, but they did say, like, we're not fully confident that the ability for the intellectual property to be used in a, what's the word they use? Basically, like a safe way that doesn't fall prey to the guardrails is going to be net positive for Disney's long-term IP. And so I think that's going to be the broader question that they have going into next year. Let me get the part. I'm going to go to Broadcom's call right now. Yeah, here it is. This is what they had to say explicitly about OpenAI. This is when the stock really took a dip yesterday.
And let's leave it at that. As far as the OpenAI view that you have, we appreciate the fact that it is a multi-year journey that will run through 29, as our press release with OpenAI showed. 10 gigawatts between 26 to more like 27, 28, 29. Ben, not 26. It's more like 27, 28, 29, 10 gigawatts. That was the OpenAI discussion. And that's, I call it an agreement, an alignment of where we're headed with respect to a very respected and valued customer, OpenAI.
So there you go. He's saying 2027, 2028, 2029, not 2026, which again isn't crazy because they're building out custom chips in data centers. Like that stuff takes time. Like, yeah, it probably is going to take longer than a year. But the street was pricing Broadcom for it happening tomorrow, essentially. Same thing with Oracle. Nvidia low of day 176, Bitcoin low of day 89.7, Broadcom low of day 359.50, down 11.5%. Nebius below 90. SPY. Are we going to go below 680? I don't know. But SPY's down as well. Amcor. Are we holding 45, 44? Okay, that's reasonable. Down 5%. I actually wouldn't mind if Amcor goes below 40. Conviction has only increased on this. So if we do get a dip, then I wouldn't be that upset on that one. But yeah, I mean, obviously that one's going to take a hit. SoFi down 2. Dell down 4. Dude, these prices are way lower than what we saw even before J-Powell spoke. So we're talking about kind of lows for the week for I mean, mostly SoFi was not at 2640 this week. This is the first time this week I'm seeing it get to the low 26s. By the way, the Trump headline as well about it looks like he's going to be making the weed classification legal today. Tilray still holding 30%. So the weed stocks, MSOS, looks like that rumor is true. We'll find out later today, but executive order might continue to keep the weed stocks alive. Oracle delayed several OpenAI-related data centers from 2027 to 2028 due to labor and material shortages. The facilities are part of a $300 billion agreement to supply computing power to OpenAI. Labor and material shortages. Okay, so they're saying they don't have enough physical logistics to set up the data centers, and they don't have enough people to help build the data centers. Look, that's a way better reason than saying we don't need the data centers because we don't have as much demand. So technically, yeah, I don't think the market should care that much about that, but it's the market. It's going to react to this stuff. This feels like a buy the dip, though, dude. Like it really does. I mean, I don't know if it recovers today, but if that's the headline, this reminds me of the information headline from a month ago where it said Oracle's margins are going to go down because of their investments in data centers. And it's like, yeah, obviously their margins are going to go down, but like the point is there's a massive growth opportunity here. And they were even wrong on the number for their margin decline. And then Oracle was down like 7% that day. But that just wasn't the biggest deal in the world. So buy cement producers and rack makers. Yeah. Maybe that's what we need to do. Facilities are part of a $300 billion agreement to supply computing to OpenAI. Both companies declined to comment. Oracle CEO still said timelines remain ambitious. Where's Oklo? Yeah, where is Oklo? Oklo right here. Oklo, wow, dude, down 9%. I mean, you can make a correlation that if Oklo potentially was part of supplying the power for any of these new Oracle OpenAI data centers, which I'm just speculating there, but imagine they were, and it gets delayed, then although Oklo's timeline is already like a decade out, like that might just further complicate their ability to keep, yeah, to Oklo 2050. Yeah. What was that? Who was that analyst who said we think who was using like some 2050 number for Oklo? Let's get some coverage on the Oracle stuff. But there was some analyst that came out and said that. They're like 2075. We think Oklo is going to be amazing. And they were like discounting the multiple. You're like, what the heck is going on? Okay, this is the coverage on Oracle.
2027. Now, that's according to Bloomberg, attributing the delays to labor and material shortages. Separately, there's a new 10Q that was filed from Oracle that actually shows
more data center leases from the company. A credit investor I spoke to tells me that this number increases the likelihood of Oracle going to the debt market sooner than expected. The estimate was halfway through 2026, according to people who follow this company, but now this credit investor says it would likely happen earlier next year. I reached.
Okay, so there's two parts of this. If there's in the 10Q more data center leasing, that's super bullish for all the reasons for why the data center thesis is playing out. But it means they're going to have to issue a lot more debt. And that's why it's, at least in the credit market, technically bearish. So that, along with the OpenAI news, I guess, is why you're seeing the decline right here.
Out to Oracle for comment. We are looking at shares of Oracle trade lower once again, down 5% after losing 10% yesterday. And we've been seeing this interesting correlation between the stock and the credit default swap, which is once again moving higher today. So keep in mind just how the story involves not just the move in the stock, but what the credit story, how that's influencing where the stock is moving. We'll keep an eye on this one, guys.
Yeah, I mean, probably not great into a tape that was already red and down. Broadcom down 10%. Thank you, Seema Modi. OpenAI delaying some data centers report there for Oracle to 2028. Mike Santoli joins us here at Post 9 as the broader markets take a leg lower. We're near session lows. What do you think is troubling the market?
Well, certainly this, right? So it sort of scrapes against this sort of raw spot in the market, which is the whole OpenAI ecosystem. And then it comes on a day when the areas of tech where we've been taking shelter, which is the Alphabet complex and Broadcom and the custom chip side, is also under some pressure. I think the bigger point is the rotation we've been benefiting from all week, which is, out of secular growth tech, AI, into cyclicals and small caps and all the real economy stuff. It's just never going to be seamless, and it's never going to be always elegant and without friction. And I always kind of have a be careful what you wish for thing. Everyone wants a broadening market. This is what happens, right? You don't have open-ended upside in valuations for non-tech companies that can just kind of instantly take up the slack. I don't think really it's changed the whole story. We still actually have stronger action today in non-tech parts of the market. But Goldman Sachs going vertical, that's a problem when it gets to 2.5 times book value. People say, okay, maybe a little bit too far, too fast.
But if you dissect, let's dissect this headline for a second. Labor and material shortages are delaying some data centers from 2027 to 2028. That doesn't change anything fundamentally, does it?
It doesn't change much fundamentally. It does tell you that there's too much capital trying to cram into a certain part of the economy, and it's stressing some balance sheets and it's stressing the resources of the country. No, I don't think that really changes the overall story. But just the notion that Oracle is straining to get this stuff done at a time when people are just sort of kind of asking themselves, can OpenAI make good on the commitments that it's basically put out there? Again, it doesn't change the whole story. NASDAQ's still up big for the year. It's not really unwinding the entire thesis. What I do think is, with a market that has really been actively in this high torque rotation, you're getting a little bit of a back.
CoreWeave is illustrative of this dynamic, down 8%. And also, we've moved past every earnings catalyst for the rest of the year. So it's kind of hard not to envision some people just saying,
that's true.
Let's ring this thing.
Although you're always past every earnings catalyst at this point in the year, and yet we often get an upward drift of,
and we still might.
No news is good news, because we don't own enough, we don't have enough exposure to it, and that could start Monday. I mean, we really don't know, but I do think that we have to recognize, I think people are recognizing that we are beyond the point of innocent wonder about AI. It's always going to come with, but can we afford it? But are they going to be financing it correctly? But can all the winners actually get a payback? All of it. And
does that mean we're not in a bubble?
No, I don't think we've been in a bubble in the sense that it's going to come crashing down. My definition of a bubble is asset prices are at a level where you can pretty easily contemplate 75% declines. Like, honestly, just massive decade-long impairment of capital is on the way. I've never thought we got there, okay, in the overall market, even in the tech sector. But short of a bubble, you get to a place where the risk reward is pretty dicey. And maybe it's not going to be that rewarding. And maybe the losers start to seem more scary than the winners seem enticing. And that's.
So that is the headline here that continues to be the argument on the day for this pain. It's getting worse too. Amazon, low of day. Nvidia, low of day. Broadcom, not low of day, but pretty close. S&P, very close to losing 680, but has not lost 680 yet. I mean, look, the point he's making is, yeah, this Oracle OpenAI news doesn't negate the nature of AI, data centers, bull market, etc. But the street is the street, and they're going to hear something like this, which doesn't fundamentally change anything. And there's already a lot of fears around OpenAI. And as a result, they're going to react aggressively, which is what we're seeing. We do have some news on Elon Musk's XAI, X. This is Twitter. Revenue is $2 billion in the first 9 months of 2025. Revenue increased 18% year to date from prior year. They lost $577 million in the last quarter, and their EBITDA is up 16%. So you got X, which is bullish, and seeing some revenue growth. Now, I would love to see XAI's numbers because it'd be exciting to see how many people actually pay for Grok. Granted, XAI owns X, so I guess there's correlation there. But yeah, any of those headlines are not going to stop how the market's reacting to Oracle and OpenAI. Oracle now 187. There she goes. S&P below 670. Below 670. There she is. We are now meaningfully seeing some red on the day. Nvidia 175. Bitmine 6% down. Bitcoin and Ethereum look like they just want to fall off. Palantir 178. That got hit. Hoodie, unfortunately, getting hit as well. Tesla was at 460 today. That's hit. AppLovin, that's hit. See, okay, so when we're seeing this type of destruction across the day, we all know algos are obviously taking place, and a lot of these stocks are. It feels like the bottom's falling out. Question is, does the falling knife stop falling today, Monday, Tuesday? Does it reverse in another couple minutes? Does it, continue to keep falling throughout next week until we get some more clarity towards the end of the year? I mean, like these are the questions that start to get asked when it becomes obvious that everything's going down for the hell of going down. Where's Iran? Is that still holding 40? No, Iran's 17 cents away from losing 40. And Nebius already lost 90. That's down 7%. This is way oversold. Yeah, it feels like it. Did we get back into fear? Let's see. Yeah, we're back into fear. Get back into fear as you see the pain here. 40 on fear and greed. As that one's red. Nvidia is about 500 billion, not including OpenAI. Saudi Arabia will be huge. Jensen saying, yeah, again, look, a lot of the bullish things around the broader AI trade, including Nvidia, AMD, the neoclouds, none of that changes with an OpenAI Oracle headline. I just think it's exhausting for everybody, which, look, it's fair. It's exhausting. But nonetheless, these are the headlines that the market, forget in 2025, I mean, going over the next 4 or 5 years, these are headlines that can immediately get you up 10% on individual stock and can immediately get you down 10% if the market's not happy with how they're interpreting it. Is it a thesis breaker is the question? No. Like if there wasn't a thesis breaker in freaking November when you had things that were much worse than this in terms of the narrative, then I don't think an OpenAI delay necessarily is what caused this. But it's annoying. It's obviously very annoying. Yeah, Oracle not really finding a bid right here. Oracle not finding a bid as that one continues to get hit. Where's Broadcom? 361. So Broadcom down 11. It has not violated below 359. CoreWeave, though, again, CoreWeave way more exposed to OpenAI than the other neoclouds. A lot of the leasing they're doing is to OpenAI, but if OpenAI doesn't have the data centers to put the GPUs in, then obviously CoreWeave's not going to get paid. So immediately, the reaction goes to CoreWeave. Julie says, I got to buy my Broadcom covered calls back. Yeah, okay. This is your bright side with the covered calls. We get you get a little reprieve. And get to, I mean, this is what I did with Nvidia last week. Just bought back all those covered calls. This has nothing to do with OpenAI. Well, the headline is OpenAI delays data center build out with Oracle. So intrinsically, you know, the market is scared Oracle. The market's scared Oracle doesn't have the demand. The market's basically saying, Oracle, you're lying to us. You're telling us OpenAI is going to give you all this money, but A, we don't believe that OpenAI has the money. B, now you're delaying the money from coming to you, which makes us feel like you're not actually going to get the money. And Oracle's like, okay, whatever, you can think what you want, but we're raising a lot of debt because we know that to build all this stuff out, we're going to need the money. And the reason we're going to need the money is because we have a $300 billion customer on the sidelines. And the market's like, well, wait a second. If you're so confident, why is this customer delaying the data center stuff that you raised all this debt for? And then Oracle's like, because of labor and material shortages. And the market's final response on that conversation is, we don't believe it's about labor and material shortages. And I think that's why the market's red. Now, the optimistic perspective is it probably is about logistics, labor, yada, yada. It's not really about demand, but you have to believe in the optimistic side versus the short-term pessimism that the market's having here. And I think that's at least trying to explain how that headline is being interpreted. Rocket Lab, yeah, is this one holding 60, 61? When things go bearish, everything falls. Rocket Lab right here from 65 to 61. Right here. ASTS also, yeah, this one got a big move yesterday, but I mean, if the entire space sector is going to get hit, then this one's going to get hit as well. When you had the scarf on, everything was green. Yeah, but you guys said I looked goofy with the scarf. So, I mean, want a green market or do we want me to look less goofy? I mean, I have to sacrifice the goofiness to to save our portfolio. Speaking of goofy, let's get some analysis here on this Disney OpenAI deal.
In Hollywood and its importance to this ecosystem. So I think it's a smart move. I don't know the details, but it seems like a good thing to have done.
Yeah, how do you think it's going to go down in Hollywood? I did notice that the unions weren't all that impressed with it. The Writers Guild of America, which was, of course, on strike over some of these issues like AI, said in part it appears to sanction the theft of our work and cedes the value of what we create to a tech company that has built its business off our backs.
Well, you know, Hollywood has said this in the past when new technologies come. And there was a problem when VHS tapes were coming into being, and that was going to destroy theatrical viewing. And then the DVDs and streaming. There's always some nervousness, and rightfully so. I think that AI is a big paradigm shift in the way that some of these other technologies maybe weren't. But if done the right way, and I'm sure Disney is stewarding this exactly correctly, it can actually be, these deals can be done in a way that protects the IP, protects the creative forces behind the stories, and actually adds to the ability to engage audiences and to monetize those stories and that capability. So it has to be done the right way, and I do think Disney will have done the exact right thing in that deal with OpenAI. So I hope that this is a good barometer for how things should be done in the future.
All right, so you got some analysts going more bullish than not on the Disney partnership. OCC grants conditional approval to Ripple, BitGo, Fidelity Digital Assets, and Paxo to become national trust banks. Wow, that seems relatively bullish for the crypto space and for the overall digital asset ecosystem. Bitcoin right there, getting a bounce, 89.6 to 90.4. It's almost $1,000. So that is a relatively decent headline here. But that is green. By the way, for everyone said that the beard was bearish, we hit all-time highs over the past week with the beard. Really over the past 2 weeks. So shaving the beard, I don't think really changes anything. The beard, I mean, we got the most dovish Fed ever, and you guys were watching a guy with a beard stare at JPOW. I don't think it's the beard. I think it's stupid OpenAI and their ridiculous spending commitments that the street doesn't believe in. That's causing all this shit. Like, I wonder if OpenAI just didn't say we're going to spend 1.4 trillion. What if they said we're going to spend 100 billion over the next couple of years? Yeah, maybe some of these stocks would be trading at aggressive multiples, but then again, maybe OpenAI, Oracle didn't deserve to go to 350. And so if Oracle had stayed flat over the past couple of months because they didn't have this massive RPO growth, that wouldn't have broken the AI thesis, but it also wouldn't have put some like ridiculous, unrealistic expectation that the market is now skeptical of OpenAI living up to. Maybe it would have been net good versus bad. Because you also, XAI doesn't have these crazy numbers. Anthropic doesn't have these crazy numbers. Like, OpenAI is the only company that's legit saying, yeah, we're going to spend trillions of dollars to build out data centers, and we're doing 20 billion in revenue. So it becomes hard to believe at some point. And again, the stock that I think this could affect the most, which I hate because I know so many people love this one, is AMD. This thing pumped on the OpenAI news. Now, the good thing about this one is that OpenAI needs the chips. Like, that is like, AMD is not selling them something that is relatively commoditized. Like, they need the chips. So you would imagine they're good for the money on this one, but they've got to come through. And if they don't, I think AMD gets hit pretty bad, just like Oracle. So that one is the one I think we all really have to monitor when it comes to that partnership. Sam won't go down alone. Well, this was what we were talking about a month ago. Remember when the Wall Street Journal did that article that said OpenAI is too big to fail? I think they were dead on about it. I think Sam is realizing that if he's going to lose in this race, he's not going down by himself. And he's trying to make sure he's intertwined with every single big company to make sure they're incentivized to keep him afloat. Q's losing the 50-day. We got a little move off 611, but yes, we are close to that level, 612.84 as well. Kwame, thank you for the super chat. Amid in the midst of all this pain, I must say that the hat is fire. I actually got this hat from Andreessen Horowitz when I was at their event. It's like their American Dynamism logo. I just wore this today with the scarf. I didn't really think twice about it. But now you guys are blaming the hat, bro. We want to blame everyone except Sam Altman. Everyone except OpenAI is getting a pass today. My hat, my beard, my scarf. Not the guy who said he's going to spend 1.4 trillion. It's the freaking scarf. Ben, thank you for the $50 super chat. Appreciate you for being here. Thank you for the super chat as well. Yeah, I can't even drink Saratoga now. Like, I feel guilty if I literally have not drank Saratoga since you guys called me out on it because I feel guilty if I drink it and the market goes down. Like, I literally can't drink that brand of water. And the bottles look so cool. Like I want to buy those bottles again and look cool drinking it, but I can't because I know I'm going to get shit. Broadcom, a little bit of a move, 363 from 359. But that's up. Just let us know beforehand. Let us know before you drink. Oh boy. If Meta drops on high expenditures, then should every company out there drop, but it seems to be an overreaction. Yeah, the only difference is Google, Microsoft, and Amazon are showing a clear ROI on the CapEx. Meta is not. So the street's not really bearish CapEx. They're bearish CapEx that doesn't have an associated narrative with it that is easy to understand. And Google, Microsoft, Amazon have something very simple to understand with the CapEx, which is the cloud. Meta does not. Still, Meta doesn't deserve to be trading at 18 times earnings. But, wow, Meta below 640 right there. But still, that narrative would create the pain. CoreWeave down 11. CoreWeave down 11. Isn't it so crazy how money can evaporate? I'm down 82 now on the day. It was down 32. Now we're down 82. Literally evaporates, bro. It's there, then it's gone. It's there, and then it goes away. Kind of feels it feels like such a rug pull too, because we got such a great JPOW, such a great rate cut FOMC. decision. We got all-time highs yesterday, even with Broadcom not having the best earnings. And then boom, Friday, take away all of it. All of it. Which actually I think sets up a pretty good run into. I mean, look, going into the end of the year down and then recovering and then hitting slight all-time highs is way easier than just like naturally inching higher and higher and higher, which we did for 6 months, which has never really been seen before. 6 months in a row of not even a single 1% move on the S&P is kind of crazy. But maybe to get that last end of year run, we need to get hit a little bit before we close out. It's just nothing we've seen in the macro data all week and jobless claims, nothing in the inflation report, nothing with the Fed, nothing macro seemed like uber bearish to discuss. Labor market is still a concern, but the labor market has the concerns have been listened to as per the rate cut. Doesn't mean the labor market's perfect, but it means at least the Fed is doing the one thing they can do to try to stop the labor market from getting killed. And so then you ask yourself, well, then what's the reason for the red? Well, it's this Oracle AI news. Well, it then begs the question, is this big enough to really cause that much pain? As of now, yes, but maybe not in the coming weeks if it reverses. Is the 10-year still up? 10-year is still up, 4.19. We got Tom Lee on the Prof G podcast. So remember, you had Aswath, the NYU professor, Dean of Evaluations, went on 2 weeks ago. I think he really scared a lot of people about the state of the markets. You got Tom Lee making his appearance. Let's listen to a little bit of this. Here's his take for being bullish 2026.
All right, let's bust right into it. You've been suppressed for the past few years. Part of it is, of course, that we've seen 6 what I call extinction events take place in markets. Everything from COVID to the bullwhip supply chain effect as the economy restarted, to that the fastest inflation cycle in history, and then followed by the fastest Fed hikes in history. And then we've, of course, had a very controversial administration, which put tariffs in place in April of this year that caused a miniature bear market. And then we've even had U.S. bombing Iran's nuclear facilities. I think all of these collectively have made investors very nervous about what I call investing in full risk, because these are what 6 black swans that happened in 4 years. And I think on top of that, we've had a Fed has not really given a green light about monetary easing. And I think the Fed's reluctance has actually suppressed business, quote, animal spirits, because the ISM has been below 50 for more than 3 years now. So I think that's all been a business cycle that has been pretty good, but not one that has been really expansionary. And I think that starts to happen next year.
It feels as if the market has become so concentrated or dependent or circling around a small number of stocks that to be bullish on 26 sort of mandates that you're, well, tell me if you think this is true, indicates that you're bullish on the Magnificent 10 and AI stocks. Is that necessarily true? And are you bullish on the Magnificent 10?
Yeah, I mean, I think 2026 is going to look a lot like this year, meaning we are probably going to have many months where the market is actually down year to date. You know, I mean, this year we were down double digits at one point before the market recovered. I think that plays out next year. But for the reason I previously stated, I think that we end up a bullish outcome despite all the skepticism. And it does require large cap tech and AI stocks to still produce earnings growth and not have a lot of PE reduction so that you still get positive return. But I think the rest of the stock market, so the other 490 or so, can actually perform well, because if the Fed is cutting and interest rates are coming down and the business cycle is sort of really starting, that's good for other stocks.
As you say, we've seen a lot of these black swan events, things that you would think would freak the markets out and make people worried. And yet I look at what has happened in the markets, and my view of it is it's not necessarily that it's suppressing sentiment. To me, it almost looks like the market is deciding to shrug everything off. So when you describe how, perhaps these black swan events have made investors perhaps have lower risk appetite, to me, I'm almost kind of taking the other side of that in my head. I'm like, it seems as if these things happen, these things that are concerning. One example would be what we're seeing with these AI circular deals. And it seems to me that the market is kind of swatting it away, shrugging it off, and the market continues to climb. And that's what we've seen this year, and we saw it the previous year, and we saw it the year before that. We continue to have this bull market, despite what many would say are really concerning events. So how would you think about that? How would you respond to my concerns there?
You're almost kind of mirroring what we're observing, but just with a different take. I mean, our take is markets climb a wall of worry. Historically, when there's a lot of skepticism, stocks can rise. In fact, markets actually peak on good news. They don't peak when people are bearish. Markets peak when everyone's bullish and it no longer responds to good news, just like markets bottom on bad news. And I think many people are skeptical, but stocks have risen. It doesn't really mean markets are shrugging off the concerns. That's one way to interpret it. My other interpretation is, there is a wall of skepticism. And I mean, maybe that's just it is like, maybe we're just talking about the same sides, just of the same thing. And
all right, we'll get back to that. But yeah, it's still pretty ugly, folks. Nvidia low of day, 175. Amcor down 5. Adobe is up 2. SPY low of day, 1.3. It's not just a little bit of a decline here. It's full on 1.3. That goes down a little bit more. You got a 2% day on the S&P, which obviously is going to lead to a 5 to 10% move on everything else. Meta still holding 2% down, and then CoreWeave down 10. Where's Broadcom? Broadcom's still holding 360, which is surprising. That's at least not losing 359. And then Rock Lab holding 60. Admit, if you put on the scarf, it stops bleeding. Okay, well, what happens if I put on the scarf and then it keeps bleeding? Like, I don't know if the scarf's going to fix this. Wow, Bitcoin, 89.6. There's your bigger move right there on Bitcoin. Throw out the scarf, then you try 2 scarves. Oh my gosh. Nebius 7.4% down, Broadcom down 10, Rocket Lab down 5. See, it looks like the bottom's falling out, but this is usually when the bottom stops falling out. But an OpenAI Oracle headline to cause all of this, I mean, my goodness. Feels more like Friday wonky behavior that's being amplified versus legitimately this is the bear case. A data center is delayed by a year. Oracle basically low of days right here at 187. Yes, that's the headline. For those that missed it, Oracle, OpenAI delayed data center for Oracle is at least the perceptual reasons why the market's getting hit. It's got to be a shakeout. Yeah, I mean, again, this happened last year. Get towards the end of the year, you start getting a lot more fear. And here's the thing, again, when stuff like in November, we talked about this, but when things go red, if you're up on something, there's 2 things. A, you're on margin, you need to deleverage. So you're going to sell whatever you're up on, which means, or even whatever you're slightly down on, which just compounds the selling. Or B, you want to lock in your gains for the year because you're afraid that it gets worse, which could be classified as a panic sell. I don't know if these are the levels. Like if you sell your Meta at 640, that's not panic sell to me. Now, Meta at 585 3 weeks ago, that feels more like panic sell. So I don't know if we're at panic sell level yet, but hints of it could be showing up, which could create a little bit more pain. SanDisk down 15%, 13.76. Yeah, a lot of these names continue to go down. Nothing to do with demand, 100%. I mean, that's not the story. At least that's not from the headlines that we're hearing. It's not about demand. Seems to be more clearly about the logistics and material shortages as per Oracle's words around this. And that should potentially be causing more of this pain. But it is liquidating the crap out of crypto, unfortunately. And that is hurting that trade, at least for crypto. Let's get an update on this Trump executive order on weed. Now, the White House again said that we're not confirming anything. But this one is there. You also have some Epstein file headline. Apparently, there's some new photos of Trump inside of a bunch of files released by the House subcommittee. I don't know if that's having that much of an impact, but that is another headline that you have this morning.
Like Tilray, Aurora, and the Advisor Shares ETF are all soaring on these reports that the president will move to reclassify marijuana as a less dangerous drug. Our Brandon Gomez has been covering the story for what feels like forever and has more on the timing of this news. Hey, Brandon.
Hey, Carl. Yeah, that's right. I feel like we've been here before, right? But with the president wanting to reschedule the drug to a new classification. Now, it is currently scheduled as Schedule 1. Now, that's on par with heroin. Down to Schedule 3 is what the president wants to do, the same as Tylenol with codeine. So why is this time different? Well, sources have told me that the president is actively drafting an executive order to be issued as soon as Monday. Now, it would advise the DOJ and the DEA to move forward with reclassification. The White House so far saying no final decision has been made yet. Now, I did speak this morning, though, with Tilray CEO Irwin Simon, one of the largest cannabis growers in the industry. He believed this time is different from past promises, telling me after many false starts, he is, quote, more optimistic this time around, adding he believes there will be change by the end of the year. Now, Carl, let's say we do get the executive order on Monday. What's next? Well, the DOJ and the DEA will publish a final rule. It'll then enter a 30-day waiting period for any challenges. We did just get a hemp ban in the government spending bill, so we know opposition is out there. And then any litigation would result in further delay of the process. So as it goes with cannabis, and as you mentioned off the top, 2 steps forward, possible 4 steps back. One cannabis lawyer, though, telling me that this is the beginning of a, quote, new era of public health policy, but that this would be a partial victory with legalization and regulatory hurdles still ahead. Still, major implications.
All right, so that could be some of the momentum on the wheat stocks that continues to make it bullish. Micron continuing to get hit as well. For people asking why is Micron, SMCI getting hit, all of them play a pivotal role in the data center build-out, whether it's the server racks or the memory for the GPUs. I mean, they're all part of this. And OpenAI delaying a data center is not intrinsically bearish. It perceptually, I mean, and that's the difference, right? Like there's a difference between intrinsic bearish and perceptual bearishness. Intrinsic bearishness means like a thesis is broken, aka Oracle saying we don't have enough demand to justify, or OpenAI doesn't have enough demand to justify paying us $300 billion. Perceptual bearishness is we are delaying a data center, everything's fine, but we need a year of delays, and then the market's like, well, no, we think that's bearish, or the perception of that is bearish. It's not a thesis breaker, but nonetheless, it'll crack some of these stocks, and that's why I think Micron right here down 6.3 as that's hit. Nebius right here, 88, a little move off 86, but that one's still down. If OpenAI can't pay, someone else will. So that is a good point, and Oracle did make a point of that on their earnings call, that there are plenty of demand outside of OpenAI. But again, it comes down to if the market's not going to give Nvidia 30 times forward earnings, they're definitely not going to believe that there's some customer out there that's going to be able to pay money if OpenAI can't pay, which probably is the wrong take, but nonetheless, that's the perception. And that's why I think we get some of the pain right here. Pam, thanks for the super chat. Probably buying SoFi, never owned it. Yeah, look, I like it here. The problem is, again, if everything goes red, then everything goes red. So if we get a bounce, SoFi probably easily bounces up back to that 2750 level. But 2026 in general, I like this name as a play. What do you think about Japan raising rates next week? So yes, that's going to happen. I think that's priced in because we all know, I mean, at least I think the credit market's based on the yield spiking, I think we know that Japan's raising rates. Could that create a yen carry trade 2.0? Yeah. But then again, like it's not like last time they did it in August, there was a surprise. People didn't know they were going to hike rates. This time, I mean, it's pretty well known they're going to hike rates. So could there be a yen carry trade impact from that next Friday? Yes, but I think we've seen a lot of it over the past couple of weeks as well. What's going on with A-Lab? This one and A-Net have been, wow, 15% down. My goodness. Ugly. This one's networking for data centers as well. all the data center names, obviously not really loving it right here. Is this sign of an AI bubble? No, not in my opinion. It's not anything to do with AI bubble. Now, could it turn into that? I mean, yeah, if these data centers keep getting delayed and eventually the market imagines that there's no money to be paid for the data centers in the first place, but you can't just base it off Oracle. I mean, we've gone through dozens of data center headlines this week. Over the past month, it's probably 30 to 40 different headlines of new data center build out. So the Oracle OpenAI stuff is one thing, but that is not conducive or indicative of the entire ecosystem for data centers. Not to mention how much the Trump administration is pushing these companies to build and invest and incentivizing them to keep doing it. So I don't know. We're gonna have to see. But yeah, I mean, look, I'm not selling anything here. This is not unless you want to lock in some quick profits on something, because like if you bought Meta at 600 and you don't really care to hold it, and you're like, you know what, I'd rather just get rid of it and keep the cash. That's different, but no. And this is also not as scary as the November crypto deleveraging, where it really felt, based on Tom Lee's thesis, that shit was really broken. I mean, that felt like a way bigger like reason to be afraid, just because, you know, that stuff could really take down a decent chunk of the crypto market. And that ended up not being that big of a deal. Same thing with the rate hike. Remember, we dropped 2 Thursdays ago dramatically. Nvidia fell from like 190 to 170 just based on Fed speak about no rate cuts. Well, we got a rate cut. We got a dovish rate cut. So no, fundamentally, I don't see everything like, I don't see any unique reason to be super excited to be like, I got to get out of this market. So this is all because of Oracle? Yes. It seems like this is all, I mean, it's Oracle and Broadcom together. That's your 1-2 punch. But Oracle really, that headline really started getting the market to be a bit more afraid. You got David Sachs on Bloomberg. Let's pull this up. Safe as well.
Pour concrete or hang drywall, their wages are up 30% because of this infrastructure boom that's happening right now. And there's actually a job shortage in many of those trades, meaning we need more workers going into those trades. So what we're seeing right now is an overall AI boom that's benefiting the economy. Okay. You know, the GDP growth rate was tracking at about 4%, and half of that, up to half of it's been attributed to AI. So I just think that this narrative about job loss has been blown out of proportion. Certainly there could be job displacement in the future, but we haven't seen any of that so far. It's been quite the opposite. It's been job gains.
David, final one on the EO, if I may. You know, what this EO allows for, is it the sort of hope that it will lead to the DOJ suing states like New York and California? And if that's the case, you know, the president and the administration's confidence that you'd win them?
Well, that is one of the tools that is in the EO, is that the DOJ has been tasked to form a litigation task force that would have the ability to push back on excessively burdensome state laws that may be unconstitutional, violate the First Amendment, things like that. By the way, the DOJ already had that power. So this is not a novel power. But what's being done here in this EO is we're marshaling all of the resources of the federal government behind the strategy of the president to create a national framework. Now, in terms of what laws we go after, that's a decision that has been made. We haven't decided whether California and New York should be targets in that way. The one that I think is probably the most excessive is this Colorado law that seeks to prohibit algorithmic discrimination.
Right.
What that basically says is that if an AI model has a disparate impact on a protected group, then that model is violating the law. Model developers, by the way, have no idea how to comply with this because they're not aware of all the downstream uses of their model. I mean, if a business decides to use an AI model in a hiring decision, for example,
right,
that business is already on the hook for discrimination. So how would the model developer know that it was being used in that way? But what Colorado is trying to do there is get their ideology inserted into the model. That's very concerning to us. We think there's a First Amendment issue there. But look, we haven't made any decisions in terms of how that litigation task force to be used.
David, briefly, all of this is set in the context of US versus China and a deemed to run forward on AI development. Meanwhile, it's been a busy week and H200s might indeed be able to get to China. How many do you think you'll do in volumes? And what do you think the appetite is of China to buy NVIDIA's more sophisticated chips?
Well, it's interesting. I just saw an article that said that China was rejecting the H200. So apparently they don't want them. And I think the reason for that is they want semiconductor independence. The same way that the United States wanted to be energy independent, they want to be semiconductor independent. So they're rejecting our chips. And that's part of the calculation that goes into the decision of what we authorize to be sold to China. The US policy has always been that we don't allow the leading edge chips, and we're not. This H200 chip, it was state of the art a couple of years ago, but now it's been superseded by the newer Blackwell architecture and the Rubin architecture that's coming out next year. So this is now a lagging chip, not a leading chip. But what you see is China is not taking them because they want to prop up and subsidize Huawei. They want to create a national champion. And that was part of our calculation of selling not the best, but lagging chips to China, as you can take market share away from Huawei. But I think the Chinese government's figured that out, and that's why they're not allowing them.
David Sachs, we always wish we had more time. White House AI.
All right, still lows of the day. Had a little slight move up, and then that got rejected like 2 seconds ago. 679.70 down 1.3 on the S&P. CoreWeave still down 10, Oracle still down 5, Q still down 2, Meta still down 2. Yeah, still seeing a little pain right here. Oracle's freeing up cash to outbid Netflix. Dude, could you imagine the real reason Oracle's selling off is with Larry Ellison for the first time in like 3 years is selling stock so that he can offer $200 billion for Netflix instead of $100 billion, or for Paramount or Warner Brothers. Like, they are so obsessed with getting this freaking company. That would be kind of funny if he actually sold stock just to get more money for that. But look, again, if I'm a Netflix lawyer, I go to the court or I go to Paramount and I say, look at Oracle stock. You guys think you can backstop an acquisition with Larry Ellison's net worth? That shit might be down by half if OpenAI doesn't end up spending the money. Like, there's no way you can trust that, which I don't think is a crazy argument. I think it's rather compelling, just based on the volatility of the stock. Netflix right there losing some of its love. It was at 97 almost, now back at 95. But that is still down. All right. I think, do we nibble here? I feel like it's at least time to nibble a little bit. I mean, we're down 1.3% on the S&P. Maybe it is a falling knife, but maybe it's worth a little bit more of a nibble. All right, we're just going to go to the favorites. We're going to keep it simple. We're going to go to the favorites. We're going to do hoodie. Haven't bought in a while. We're going to get below 120. We're going to do 10 shares hood, 119.65. We go Nebius. Let's do 15 shares Nebius, 88.12. First time I'm buying Nebius in 3 weeks. First time I'm buying hood in a while. There's Nebius, and with hood we had 10 shares. Dude, Nvidia 175, bro. Like, all right, I'm doing 10 shares Nvidia. I'm doing 10 shares Nvidia too. I'm not even trying anything new here. I'm just DCAing into the names I already like. Not trying anything new here. Is there anything new that is super on sale today? Where's Zeta? No, Zeta's not compelling enough. 18. Zeta's got to get back to 16. SoFi already bought last week. So we did 10 hood, 10 Nebius. So we did 15 Nebius, 10 hood, 10 Nvidia. Rock Lab's not on sale, guys. Rock Lab's up 40% this week. Rock Lab's not on sale. I love Rock Lab, but it's up a lot this week. It's not on sale. We're not buying Duolingo. We have it in the ETF, but I'm not touching that stupid green owl. Even though I do think they have a moat, I just think their narrative sucks. Google's not on sale either. I mean, yeah, like, look, Google, it's a good dip, but from 330, but it's got to be more compelling. Still above 300. VG, do I finally just borrow Matt and Chris's conviction? Look at this thing, bro. 74%. If I buy this, I'm legit going to set up a freaking new Robinhood account right now and put the VG in there. Oh my gosh. Look, if I buy this, you guys cannot ask me every day about VG because I don't know anything about it. All I know is Matt and Chris love this thing. And they are legit in terms of their oil and gas analysis. Definitely Matt, given he works in the industry. So I'm not going to be the VG cult leader. I'm not going to be able to answer when this shit goes down again. I will definitely brag when it goes higher and be like, VG, baby, oil and gas. But when it goes lower, don't ask me to explain this shit because I don't know what the hell they do other than they're a global venture, which is what they stand for. All right, 200 shares, VG, we're in. Don't ask me about this. I don't know what this is, okay? I just know that Matt and Chris swear by this damn thing. All right, VG, we're in it. Officially in it. Dude, I'm buying more Grab too. This is getting stupid at this point. They got the go-to thing coming up. All right, we bought 100 of Grab. 100 more Grab. That's it. I think that's it for, that's what, like $5,000? That's not crazy. 10 Hood, 15 Nebius, 10 Nvidia. It's about $7,000. 200 VG, 100 Grab. Dude, are we getting a little bounce right here? We got Hood 120, Nebius, I got Hood 119, Nebius I got 87, that's 89. Grab, I got 514, that's up a couple cents. VG, I'm already up freaking $7. That's a coffee. Did we just get the bottom? Did we time this shit? You know your boy. No, I'm not going to say it. Never mind. I'm not going to say it. I'm not going to say it. I was going to say something. No, I'm not going to say it. But let's see if we got the bottom. Is there anything else that's really on sale though today? So I got VG's the new one that we got today. Everything else I already have some in. Is there anything else that's like actually discounted today? Like actually red? Like red. Like stupid red. Fermi is 34% down, but I don't understand that business too much. TFC's green, Apple's red. Amazon I've been buying. I'm not going to buy Amazon here. I bought this at 219. I have Nebius, so I can't cheat on Nebius, guys. You gotta have a monogamous relationship with these data centers. SoFi we bought last week. Bloom Energy. Okay, so look, I got to do more research on this. I'm interested. I get it's down 10%. I really don't know enough about it to take a shot here. So this is on the list for deep dives though. There's a lot more people that are getting excited about this one. I do have to look at it deeply. The BM&R is not on sale either, bro. BM&R, I mean, I get it's down 6%, but it's up a lot over the past couple of weeks. So I wouldn't say that's necessarily on sale. Also, it's not a new name that I'm looking for. Netflix is also, there's too much shit Netflix has to deal with. There's a lot of stuff that they have to figure out. This is not at 40 times earnings, like super attractive here. Especially because, what, do we think Netflix is going to 130 anytime soon? Even 115? Like, I don't see, I'm sorry, I just don't see that anytime soon. There's a way too much overhang on this stock. So no, Netflix is not the exciting one. A-Lab, I don't know enough about. Like, I've got to relatively understand a little bit about the company, or I've got to really have conviction in the person that is pitching it, which is I do for VG with Matt and Chris. But I also got to know something about the name if I'm going to try. Shopify is not on sale. Shopify is down 2%. Like the names that are really on sale today are Broadcom, but I don't like Broadcom's multiple. If I'm buying Nvidia, I'm not buying Broadcom here. And the only other one that's really on sale is Oracle, but Oracle has too much of a bad narrative in terms of this debt situation, which again, it might be a good price here, but I don't necessarily want to be tied to that. CEG, it's down 5%. This one's had a big year though, like a really big year with their energy contracts. Iran's below 40. Tesla, I wouldn't say is necessarily on sale. Centrus Energy. Why is Centrus down 10%? Dude, all the energy now. Okay, so it's not just Bloom. Well, I guess they're all down because the data centers trade is down and energy demand is coming from data centers. GE Veranova down 4%, although this is at a really good week. Lemonade's down 5%. Microsoft down 1%. Next Decade down 3%. Yeah, a lot of the energy names are getting hit. Costco, I can't buy Costco because I value my friendship with Steve. Like, I have, I have to manage a friendship here. You guys want me to freaking lose a friend over Costco? How could we do that?
You do. That's the
Sure.
force today.
Let's start with that headline. The market's certainly sniffing this OpenAI Oracle data center delay story as a financing issue, because remember, the street has been laser focused on Oracle's $300 billion deal, Scott, with OpenAI. So any signs of delays, the market is going to be sensitive to. And yes, it does follow a new 10Q that was filed by Oracle that shows a significant increase in data center leases, which, as a credit investor told me, does raise the likelihood of Oracle going to the debt market sooner than expected. The street was sort of anticipating early to mid 2026. Now the expectation is this needs to happen in early 2026. And then the question is, will it be a jumbo bond sale or a term loan involving banks, which does increase the likelihood of those banks using Oracle's credit default swaps as a hedge? That's one of the reasons we.
Okay, so the credit default swaps for Oracle are mooning. Again, if the argument is, hey, instead of 2026 is 2027, and that's causing all this pain, in that 1 year, I don't know if that's enough to say, okay, the Oracle thesis, OpenAI thesis is dead. Definitely brings up questions, not saying it doesn't, and these are healthy questions. That should not be enough to freaking take us down back to 650 on the S&P or anything crazy like that. But that is the headline for those that missed it. Oracle OpenAI delay means Oracle is going to issue debt sooner than expected, and that's why those stocks are getting hit, and they're taking the market down with it. Bloom still down 9%. Iran is down 7%. Amazon down 2%. S&P, a little bit of a move. Did we nail the VG? Oh, dude, 644. I'm up $21, bro. That's lunch on VG. If we sold our VG, that is a nice $20 lunch that we got. Look at that. 633 to 644. Should have bought 1,000 shares. Would have been able to buy a new scarf at that point. All right, what else? What else is still hit today? Carnival. I mean, some of this stuff is actually starting to recover. S&P went from 679 to 681. So we got Nebius at 87. That's almost at 90. Hood at 119. That's almost at 121. ENS is down because of the energy stuff, but they're up from 120 to 150 in the past 2 weeks. So I don't know if it's the most attractive here, given the run they've had. Amcor, I'm waiting below 40. That thing's got to really give us a better opportunity. I just don't know enough about A-Lab. I agree A-Lab's an opportunity. I really don't know enough about it. Now you need to do VG weekly. Oh my gosh. I should probably figure out how much revenue those guys do. That would be important. I know they do like $1 billion in EBITDA though, right? If I'm not wrong, VG does $1 billion in EBITDA, which means what's their market cap? 15. All right, so they trade at 15 times EBITDA. That's not crazy. That's not insane. Get Steve into it. I think Steve knows. Well, no, Steve yesterday, he said he doesn't like VG. He likes the pipelines like Kinder Morgan more. Kinder Morgan, that one's down a little bit as well. Ondas is not a massive opportunity today. It's down 5%. I'm talking about what's down 10, 15, 20%. because this Oracle AI stuff that's like screaming as a buy. And the only two names are Broadcom and Oracle. But, those are the hardest names to buy on a day like this if you don't really believe in the thesis. Roblox is down 4%. That's not crazy. Oklo, I'm sorry. I'm just not buying Oklo. EOSE has a really aggressive multiple, but I agree this is a great name in the energy space. I really need to look into them along with Bloom. Obviously, all the energy names are getting hit. But dude, you gotta overlook the multiple on EOSE. 65 times sales, and just believe in the growth story. TE, I've heard of TE. This is another energy name, right? Down 7%, 10%. Okay, so definitely the sector on sale we can see is energy, 100%. It's also the sector I know the least about, which is something we need to change going into 2026. But yes, I agree. It's hard for me to just randomly buy them because I don't know a lot about these companies, but all of them on sale. And it's funny because any data center hiccup, forget the neo clouds that will go on sale, the energy stocks immediately go on sale because right now all the energy utility demand is propped up by data centers. Which again, Jensen, for those that missed the headline yesterday, he's hosting some summit next week about power shortages via the data center build out. So even Jensen's recognizing that for him to keep selling these chips, he needs to make sure that the grid is secure, which could actually be a really buy the news event on the energy names if Jensen announces it. Like imagine Jensen says we are investing $100 billion in electrification for the grid or something crazy like that. Which, I mean, I think the street would get really excited about. Just someone being very committed to the grid being maintained. Rivian has not shown any weakness today in the face of all this red. 17% for Rivian, which is incredible. Yeah, look, GE Vernova and Constellation are very high quality energy names that I deeply want to look into. They are not your typical energy name because they have decades long of experience in terms of building a business rooted in energy, and they're now just getting this massive demand lift. And they're increasing the dividend buyback, so those are definitely names to take into account. Lulu and Rivian kind of going against the market here. Lulu still up 10, Rivian up 19, VG's up 3. Oh, we got Nvidia at 175. It's at 176. What did we get Nvidia at? We got Nvidia at 175.90. All right, so we got a little bit of a move right up there. Let's get a little bit more coverage here on Oracle and keep going from there.
Where investors typically don't. A minute ago, I'm going to use it again. This is now a speculative stock. But if it comes through, and by it, I mean Larry Ellison, I do mean Sam Altman, I mean OpenAI, this is a stock that 180 right now will be over $300, kind of in the blink of an eye. And by the time the market figures that out, it's already going to be much higher. But what do you have to see, or what does the market have to see to get this stock to move up that percentage? It's going to take some time. And by time, I mean another quarter or two, because as Simo was just talking about, it's in the next quarter or two that this funding needs to come through. And that's an overhang right now. We know that. That is part of why.
You really think next quarter or two? That seems completely unreasonable.
Well, no, because what's really vexing me right now are the credit default swaps. And as Sima just pointed out, that may well be the banks hedging in advance of financing that's going to come in over the next quarter or two.
Which, again, is why the stock is also getting hit. Doug says, keep in mind, we are probably down because Chris bought NVIDIA. Chris admitted it last night on the close. He said, look, guys, it's probably at the top now that I'm bullish on NVIDIA. So that is a fair point. Hopefully Chris is taking some time to DCA into into NVIDIA. Doug, thanks for the super chat. This is the opposite of a bubble. Bubbles don't get 10% drops on good earnings of the 8th largest company. Bubbles don't ignore the greatest 2 earnings reports in history, like NVIDIA and Palantir. Yeah, I mean, if a 10% drop on the 8th largest company in the market were to collapse the entire market, then that means that company should have never been the 8th largest company in the market. So we're talking about a 10% drop on a $2 trillion company. That should be hopefully enough of the pain. But it also is not indicative by any sense of the imagination that that's a bubble. 1000% would agree with that. Staples, thank you for becoming a channel member. Appreciate it. And thank you for being here. Wing says, what is going on today? I'm at work and I'm busy. The Oracle headline that we just talked about, that is creating more of the pain. OpenAI with the delay on that data center is what's causing that spike. We're getting a little, I don't want to say recovery, but a little bit of a move higher. Not at the lows of the day, but still pretty red regardless on Friday. Fear and greed right now, still at 41 for fear. We were at 45 in the morning.
But if you get that financing done and the pressure comes off of the credit default swaps, I think people are going to look at a decline in the credit default swaps if it occurs.
It's a
and they're
the
going to
credit
say that's
default
a time
swaps
to
are
get in the stock.
they're a proxy, not just for Oracle, but they're a proxy in a way to hedge the AI trade.
Exactly.
So there's an inflated number there that's not just to back Steve up on this. This isn't just an Oracle story. It's the only place you can go where you're going to see.
That is a really good point. The Oracle credit default swaps are not bearish Oracle. They're bearish AI in general. So they're being seen as a proxy. By the way, those credit default swaps are up 200% in the past 3 months to go against AI or to at least hedge against AI, which ends up hurting Oracle stock. But nonetheless, it is something the credit market is using as a vehicle, not necessarily as a direct correlation between being bearish about Oracle.
This debt where you can go and be hedged across the trade.
No, of course. This whole thing is a proxy for the AI, everything almost. It's like AI hopes, AI dreams, AI jitters, AI doesn't work out. I mean, this stock and CDS are sort of reflecting everything.
And I don't think this works, by the way, until you start to see real revenue
from OpenAI.
OpenAI. It's not going to be a quarter or two. It's the market is assuming that they're going to get the lending.
It's worth pointing out that while OpenAI is a huge part, more than 50% of the remaining performance obligation at Oracle, it's not all of the RPO. It's about 55%. There's a lot from the other AI players that, frankly, if just that comes through, this is a cheap stock.
How about this? So if you look at where the pain is being felt today, of course, you look at the power players. Take a look at some of these names. Let's cycle through as many as we can show. GE Vernova is coming off a monster day and a huge week for that stock. Let's show the week, right? Because they had their investor day and they blew everybody away. And the stock was great. And then obviously, look at that. That's the week. Now it's down 4% today. Constellation, Eaton, NextEra, Quanta, Vertiv. Brenda, you've got Eaton and Quanta too. These are the places that you look if you're worried about this trade and the durability of it, whether some of these stocks have simply just been bid up too far on where the expectations are expected to be. Thus, the valuations have expanded as well.
I think there's still room for grid investments and a need for more electrification. It's not just the data center play. But I hear you. A lot of these stocks have really had a tremendous year, and that's reflected in the valuation. But I do think the fundamental story there is still good. So on a day like today, we would be more a buyer or adding to positions rather than selling, because I don't think over the next few years that this trend is going to change. We can look out to 2028, and that's still a ways away. And I think the fundamental story is still going to be positive, especially for these companies that are, really directly tied to grid investments or electrification, which is an onshoring story and other things that are playing into that strength. It's not just data centers.
And I agree with her. If you think this theme around data centers is not slowing down, then an OpenAI delay on an Oracle data center, that's not the reason to be super upset or scared. At least it doesn't feel like that's the reason to be super upset or scared. S&P, where are we at? All right, folks, I think we'll end it right here. S&P 682, okay? So up from 679 to 682, not a full V, but the inklings of a V, which is nice to see. I should have worn my scarf right when I was buying stocks. then we could have really said the scarf is needed for a bull market. But then I would have never been able to, it'll be freaking July. It'd be like, Amit, wear the scarf. Time to put on the scarf. We need some green. But there you go. We'll see. Maybe this reverses towards the end of the day. Looks like that 679 low might have been the low for the day. Markets are emotional, irrational. Maybe they're going to wake up in 20 minutes and be like, hey, the data center headline is not that serious. Iran up from 39 to 41. Amazon still 226. SoFi almost 27, up from 26.20. Nebius 91 from 86. Even CoreWeave 77 to 80. Meta 638 to 643. Yeah, guys, this looks across the board. Look at the Qs, 611 to 615. This looks across the board like it should have the resemblance of a V towards the end of the day. But we'll be back for the market close, and we'll see if that's the case. All right, that's it. Thank you, everybody, for being here. Let's do word of the day, and then I'll be out. I'll be live on the close. We'll see what we've got going on. By the way, Steve probably doesn't even know the market's down. This is what this guy just texted me. Nice little patsies for lunch. Look at those meatballs. Well, by the way, I took my sister and cousin to Patsy's over Thanksgiving, and they love the meatballs as well. If anyone's in New York, Patsy's is the spot to go. It's got to be the spot to get some good Italian food. Poem of the day. Don't tempt me. Don't tempt me. I already went 0 for 4 on the poems today. Don't make me go 0 for 5. Because I'll try to go 1 for 5. Because it's the attempt that counts. I will try. So don't tempt me. I will try. Word of the day. Intertemporal optimization. The process of making decisions that balance trade-offs between returns and risks across different points in time, rather than maximizing a single period outcome. A disciplined option seller practices intertemporal optimization by sacrificing short-term yield to preserve long-term capital efficiency. Okay, I've never heard that word before, or this phrase, but it is the process of making decisions that balance trade-offs between returns and risks across different points in time, rather than maximizing a single period outcome. I think all of us, to an extent, are navigating intertemporal optimization in our portfolios. And maybe today you've engaged in intertemporal optimization either by selling something to balance some risk or buying something and trading off with a different portfolio move to take advantage of this dip that potentially is turning into a V-shape. I guess we're going to see how this turns out towards the end of the close. All right, that's it. Thank you, everybody. Hopefully we end out not even green, but just a little bit better than where we were at the very lows. I mean, this thing is trying. She's really trying. VG, Grab just went green. Nvidia 177, she's trying. We're going to see. We're going to see by the end of the day. No poem. Don't tempt me for the poem, bro, because I will sit here and think. I already kept you guys here for almost 4 hours. I will sit and think for a poem. Don't freaking tempt me on it. But your boy might have a poem on the market close. I might spend the next couple hours thinking of one, aka asking ChatGPT for a poem. All right, that's it. Thank you, everybody. I'll see you guys on the market close. Bye, everybody. Have a good one.